22 of the most daring bank heists of all time true crime stories. Number 1. The Lufthansa Heist, 1978. In the pre-dawn darkness of December 11, 1978, Kennedy Airport sat quiet. Inside the Lufthansa cargo terminal, a routine night was about to become anything but ordinary. This wasn't technically a bank robbery, but it remains one of the most audacious cash heists in American history, and it all began with a conversation in a Queens diner. The mastermind was James Burke, known on the streets as Jimmy the Gent, a feared associate of the Lucchese crime family. Burke had learned from a Lufthansa worker named Louis Werner about a vulnerability in the airport's security. Werner, drowning in gambling debts, had become desperate enough to share information about massive cash shipments that passed through the cargo building. The plan took months to develop. Burke assembled a crew of experienced criminals, each selected for specific skills. There was Tommy DeSimone, a volatile enforcer known for his unpredictability. Parnell Stacks Edwards would steal the getaway van. Angelo Sepe would help with the actual robbery. And several others, each promised a substantial cut of what they expected to be perhaps $1 or $2 million. What they didn't know was that on this particular night, the vault would contain far more than usual. A shipment of U.S. currency being returned from Germany, combined with other valuables, meant there would be over $6 million in cash and nearly $1 million in jewelry waiting for them. At 3:12 a.m., the crew arrived at the cargo terminal. They wore ski masks and carried weapons, though Burke had been explicit. No violence unless absolutely necessary. They quickly overwhelmed the security guard, binding him with tape and cord. Moving through the building, they systematically rounded up every employee they could find. Each person was restrained and gathered in a break room, kept calm by the robbers' professional demeanor. The crew had expected the vault to be locked with a time delay, but fortune smiled on them. An employee had the combination and, under gentle persuasion, opened it without resistance. What the robbers saw when those doors swung open exceeded their wildest expectations. Stacks of bundled currency filled the vault, along with boxes of jewelry and other valuables. For the next hour, they worked steadily, loading everything they could carry into the stolen van. The cash was heavy, bundled in standard bank wrappings. The jewelry was in sealed containers. They took it all, making multiple trips between the vault and their vehicle. The employees remained bound and silent, understanding that cooperation was their safest option. By 4:30 a.m., the robbers had vanished into the New York night with approximately $6.6 million in total. They left behind stunned employees and what would become the FBI's most intensive investigation of the decade. The robbery had been executed with such precision that investigators initially struggled to understand how the security systems had been so thoroughly bypassed. But here's where the story takes its dark turn. Burke had always been paranoid, and with good reason. He understood that the biggest threat to any criminal enterprise wasn't the police, it was the criminals themselves. He knew that people talk, especially when they suddenly have money to spend. And so, methodically, Burke began eliminating anyone connected to the heist. Stacks Edwards was the first to die, shot in his apartment because he'd failed to destroy the getaway van as instructed. Tommy DeSimone disappeared, likely killed by the Gambino family for other offenses. Martin Krugman, the bookmaker who'd first brought the opportunity to Burke, vanished. One by one, members of the crew and their associates died or disappeared. Some estimate that Burke ordered up to 10 murders to protect the secret of the Lufthansa heist. The investigation consumed the FBI for years. They knew who had committed the robbery but struggled to prove it. The money had vanished, distributed, and hidden. Most of the crew was dead. Werner, the insider, was eventually convicted for his role, but the major players remained frustratingly out of reach. Burke himself was never charged with the Lufthansa heist, though everyone knew he'd orchestrated it. He was eventually convicted of murder in an unrelated case and died in prison in 1996. The vast majority of the money was never recovered, and most of the jewelry remains missing to this day. The heist became legendary in criminal circles, inspiring countless books, documentaries, and serving as a major plot element in Martin Scorsese's film Goodfellas. It represented both the pinnacle of organized crime's operational capability and the inevitable self-destruction that comes from greed and paranoia. What makes the Lufthansa heist particularly fascinating is its aftermath. The robbery itself was nearly perfect, well-planned, efficiently executed, and initially successful beyond the crew's imagination. But the paranoia and violence that followed demonstrated why such crimes rarely lead to happy endings. The money that was supposed to set these criminals up for life instead became blood money that led to their deaths. Federal investigators would later reflect that the heist succeeded because of discipline and planning, but failed because of human nature. The same greed that motivated the robbery ensured that no one could be trusted to keep quiet. Burke's solution, murder, only drew more attention and intensified the investigation. Today, the Lufthansa heist remains one of the largest cash robberies in American history and certainly one of the most infamous. It stands as a reminder that in the criminal world, the greatest danger often comes not from law enforcement, but from one's own accomplices. Number 2, the United California Bank Heist, 1972. The President's Day weekend of 1972 began like any other holiday in Laguna Niguel, California. The United California Bank branch sat quiet on Saturday morning, closed for the federal holiday. Nearby businesses were shuttered and the parking lot was empty. No one noticed the group of men who arrived with tools and a plan that would soon be recognized as one of the most audacious bank heists in California history. Emil Dincio was the mastermind, a professional burglar from Ohio with a particular expertise in safecracking. He wasn't a typical bank robber. There would be no guns drawn, no hostages taken, no dramatic confrontation. Instead, Dincio specialized in patience, technical skill and meticulous planning. He'd been recruited for this job by a group that had been watching the UCB branch for months, studying its patterns and vulnerabilities. What made this particular bank so attractive was its vault. United California Bank served a wealthy area, and local residents used safety deposit boxes to store not just documents, but valuable jewelry, cash and other precious items. Intelligence suggested that the total value might reach several $1 million. But accessing those boxes would require getting through multiple layers of security. The team had rented a property near the bank weeks earlier, using it as a staging ground. They'd acquired sophisticated tools, drilling equipment, explosives, acetylene torches and everything else they'd need to breach the vault. They'd studied the bank's construction, learning where the walls were weakest and where the alarm systems were located. On Saturday morning, the crew approached the bank from a neighboring business. They'd already cut through the wall in an adjacent building, creating an access point that wouldn't be visible from the street. Moving carefully, they broke through into the bank itself, entering through a back area where they'd have privacy to work. The vault was their target, and they knew it wouldn't surrender easily. Modern bank vaults are designed to resist exactly this type of attack, with reinforced concrete, steel plating and sophisticated alarm systems. But Dincio had broken into dozens of vaults in his career, and he approached each one like a puzzle to be solved. They began drilling, using specialized bits designed to cut through hardened steel. The work was exhausting and time-consuming. One person would drill while others rested, creating a rotation that kept them fresh. The noise was substantial, but the holiday weekend meant the surrounding businesses were empty. They had time and they used it carefully. As Saturday turned into Sunday, they continued working. When one drill bit wore out, they'd replace it and continue. The vault's walls were thick, requiring multiple drill holes in strategic locations. They were working toward the locking mechanism, planning to disable it from the inside rather than trying to crack the combination. By Sunday evening, they'd created enough access to begin working on the actual lock. Using smaller tools, they carefully manipulated the internal mechanism. It was delicate work, requiring a steady hand and deep understanding of how bank locks functioned. Dincio directed the operation, making adjustments based on what he could feel through the tools. Finally, late Sunday night, the vault door swung open. Inside, rows of safety deposit boxes lined the walls, each one potentially containing thousands of dollars in valuables. The crew set to work with crowbars and drills, forcing open box after box. They found exactly what they'd hoped for: jewelry, cash, gold coins, bearer bonds and other valuables that wealthy residents had stored for safekeeping. They worked through the night, methodically opening boxes and sorting through the contents. Some boxes contained only documents, which they ignored. Others were treasure troves of wealth. They filled bags with their haul, making multiple piles as they went. The sheer volume of valuables was staggering, far exceeding their initial estimates. By Monday morning, as the holiday weekend drew to a close, the crew had opened over 500 safety deposit boxes. They'd stolen an estimated $30 million in cash and valuables, though the exact total was never fully determined because many box holders never fully disclosed what they'd stored. Some of those boxes contained assets that their owners preferred to keep off the books for tax purposes. The robbers carefully exited the way they'd come, sealing the access point behind them to buy a few extra hours before discovery. They loaded their haul into vehicles and dispersed, following a prearranged plan that would take them in different directions across the country. The bank wasn't scheduled to open until Tuesday, giving the thieves a substantial head start. When employees finally entered on Tuesday morning, they discovered the breached vault and the devastation inside. FBI agents were called immediately, and what they found amazed them. The technical sophistication of the break-in was remarkable, suggesting highly experienced criminals. The investigation quickly focused on known safe-cracking specialists, and Emil Dincio's name came up early. His reputation in the criminal underworld was well established, and this job had his signature all over it. Federal agents began tracking his movements and those of his known associates. The break in the case came from informants within the criminal world. Some of the jewelry was too distinctive to fence easily, and when pieces began appearing in certain markets, investigators could trace them back. Additionally, some crew members proved less disciplined than others, spending money in ways that attracted attention. Within months, several members of the crew were arrested. Dincio himself was eventually tracked to Ohio and taken into custody. Facing overwhelming evidence, some of the robbers cooperated with investigators, hoping for reduced sentences. They led authorities to some of the stolen property, though much of it was never recovered. Dincio was convicted and sentenced to prison, where he would serve several years. The United California Bank heist remained legendary in law enforcement circles as an example of professional criminal expertise. The planning, execution, and initial getaway had been nearly flawless. What ultimately led to the crew's capture was the same thing that catches most criminals: human behavior. The heist had lasting impacts beyond the immediate theft. Banks across the country upgraded their vault security, adding additional sensors and alarm systems designed to detect the type of drilling attack Dincio had used. The safety deposit box industry changed its insurance practices, and banks began requiring customers to fully declare the value of what they stored. For the wealthy victims, the robbery was personally devastating. Many lost family heirlooms, jewelry with sentimental value, and items that could never be replaced at any price. Some had stored assets in the safety deposit boxes specifically to hide them from tax authorities, which created the awkward situation of being unable to fully report their losses without admitting to tax evasion. The United California Bank heist demonstrated that even in the modern era, with all its technology and security systems, a skilled and patient criminal could still succeed through old-fashioned expertise and determination. It was a wake-up call for the banking industry and law enforcement alike. Number 3. The Dunbar Armored Robbery, 1997. On the night of September 12, 1997, the Dunbar Armored Facility in downtown Los Angeles was winding down from another busy day. Armored car companies handle millions of dollars daily, transporting cash between banks, businesses, and Federal Reserve facilities. Security is paramount in this industry, with multiple layers of protection designed to prevent both external attacks and internal theft. But sometimes the most dangerous threat comes from those who are most trusted. Alan Pace had worked for Dunbar Armored for years, rising to a position of responsibility and trust. He was a regional safety inspector, which meant he had access to facilities, knew security procedures, and understood the company's vulnerabilities. And for reasons that would later emerge, financial pressure, perhaps greed, maybe just opportunity, Pace decided to use that knowledge to commit what would become the largest cash robbery in American history at that time. Pace didn't plan this alone. He recruited 5 childhood friends from his neighborhood, men he'd known for decades and felt he could trust. He coached them on exactly how Dunbar's security worked, where the cameras were positioned, what the alarm systems would and wouldn't detect, and most importantly, when the facility would be most vulnerable. The plan was audacious in its simplicity. Pace would use his access badge to enter the facility after hours, bringing his crew with him. They would then use Pace's knowledge of the building to avoid cameras and security measures while they loaded money into a vehicle. The window of opportunity would be brief, perhaps an hour at most, but if everything went according to plan, they could steal millions. On that Friday night, Pace and his crew arrived at the Dunbar facility around 7:30 p.m. Using his legitimate credentials, Pace opened the facility's doors and led his accomplices inside. They moved quickly through the building, heading directly for the vault room where cash was stored before being distributed to bank clients. Dunbar's security system was sophisticated, but Pace knew its blind spots. He guided the crew along routes where cameras couldn't capture them clearly. When they reached the vault area, Pace's access again proved invaluable. The vault wasn't locked with a time delay at this hour because employees still needed access for legitimate business purposes. Inside the vault, they found exactly what they'd hoped for: millions of dollars in cash, sorted and bundled for the next day's deliveries. The money was organized by denomination and wrapped in standard bank packaging. The crew began loading it into bags they'd brought, working as quickly as they could while still being careful not to leave evidence. The operation took approximately 30 minutes. They loaded bag after bag, filling them with bundled cash. The weight was substantial. Currency is heavier than most people realize, and they were dealing with millions of dollars. They made multiple trips to their vehicle, which Pace had positioned in a loading area where it wouldn't seem out of place. By 8:15 p.m., they had loaded approximately $18.9 million in cash into their vehicle, the largest amount ever stolen in a cash robbery in the United States. They left the facility just as they'd entered, with Pace using his credentials to exit. To anyone reviewing security logs later, it would appear that Pace had simply worked late and then left, nothing unusual for someone in his position. The robbery wasn't discovered until the next morning when employees arrived and conducted their standard inventory of the vault. The initial count showed a massive discrepancy, and a recount confirmed the worst. Millions of dollars were simply gone. There were no signs of forced entry, no evidence of an external break-in. Everything pointed to an inside job, but the scale was unprecedented. The FBI's investigation began immediately, focusing on employees with access to the vault. Pace was among those interviewed, and he initially deflected suspicion by cooperating fully with investigators. He expressed shock at the theft and provided information that seemed helpful, playing the role of a concerned employee trying to assist the investigation. But FBI agents are experienced in reading human behavior, and something about Pace raised concerns. His financial situation showed some inconsistencies, and his story about his whereabouts had minor discrepancies. The investigation began focusing more intensely on him, examining his phone records, financial transactions, and known associates. The break in the case came several months later when one of Pace's accomplices made a critical mistake. Eugene Hill, one of the crew members, bought a luxury home with cash, claiming the money came from a real estate investment. But the FBI's financial analysis showed that Hill couldn't have had legitimate funds for such a purchase. When confronted with the evidence, Hill's story began to crumble. Facing the prospect of a lengthy prison sentence, Hill made a decision that would doom the entire crew. He agreed to cooperate with investigators. He revealed the entire plot, explaining Pace's role, identifying the other crew members, and describing how the robbery had been executed. With this information, the FBI moved quickly to arrest everyone involved. Pace and the others were taken into custody in early 1998. The evidence against them was overwhelming, particularly with Hill's cooperation. Some of the stolen money was recovered from various hiding places, though a substantial amount remained missing, likely spent or hidden so well that authorities couldn't locate it. The legal proceedings moved forward, and one by one the crew members were convicted. Pace, as the mastermind and the person who'd betrayed his employer's trust, received the harshest sentence. He was sentenced to 24 years in federal prison. The others received sentences ranging from 5 to 20 years, depending on their level of cooperation and criminal history. The Dunbar armored robbery had lasting impacts on the industry. Armored car companies nationwide reviewed and upgraded their internal security measures. The concept of a safety inspector having such broad access was reconsidered. Background checks became more stringent, and psychological evaluations were added for employees in positions of trust. Financial monitoring of employees was enhanced to detect unusual spending patterns. For Dunbar Armored itself, the robbery was both a financial disaster and a reputational crisis. While insurance covered much of the direct loss, the company's image as a secure handler of cash had been severely damaged. They had to work hard to rebuild client confidence, implementing new security measures and being transparent about the changes they'd made. The case also highlighted a persistent challenge in security: the insider threat. No matter how sophisticated external security measures become, individuals with legitimate access remain a vulnerability. Pace had demonstrated that trust could be exploited, and that knowledge of security systems could be weaponized against the organization those systems were meant to protect. What's particularly interesting about the Dunbar case is that it succeeded not through violence or sophisticated technology, but through patience and betrayal. Pace spent years in his position building trust and learning the system before he struck. The $18.9 million stolen in the Dunbar robbery held the record as the largest cash heist in American history for several years. Number 4. The Brink robbery, 1983. American connection. While the famous Brink robbery occurred in London, its tentacles reached deep into the American banking system, making it relevant to any discussion of daring heists with U.S. connections. The story involves over $30 million in gold bullion, and much of it was eventually laundered through American financial institutions, creating a complex international investigation. On November 26, 1983, 6 armed robbers broke into the Brink warehouse at Heathrow Airport. They expected to find a few million in cash. Instead, they discovered 6,800 gold bars weighing 3 tons, along with diamonds and cash. The total value exceeded $30 million, making it one of the largest robberies in history. The connection to American banking came in the aftermath. The robbers needed to convert the gold into usable currency, and that meant finding ways to legitimize it. This is where American criminals and corrupt financiers entered the picture, creating a money laundering network that stretched across the Atlantic. Kenneth Noy, a British criminal, became the primary fence for the stolen gold. But he needed American connections to truly capitalize on the heist. He reached out to contacts in New York and Florida who specialized in moving large amounts of questionable assets. These American financiers had connections to legitimate bullion dealers and banks willing to ask few questions about the origin of gold, especially if the paperwork looked legitimate. The laundering scheme was sophisticated. The stolen gold bars had serial numbers that could identify them, so they had to be melted down and recast into new bars with new numbers. This was done in secret foundries in England, but the recasting created a new problem: how to introduce the new bars into the legitimate gold market without raising suspicion. This is where American institutions became involved. The newly cast gold was shipped to dealers in New York who specialized in precious metals trading. These dealers, some operating with full knowledge of the gold's origin and others perhaps willfully ignorant, helped introduce the bars into the legitimate market. From there, the gold could be sold to refineries, jewelry manufacturers, and investors, effectively cleaning it. The money from these sales flowed back across the Atlantic through a complex series of transactions designed to obscure its origin. American banks processed wire transfers that represented proceeds from the gold sales, often through multiple intermediate accounts designed to create confusion about the money source. Some funds went through Caribbean offshore accounts controlled by American financial criminals before eventually ending up in England. Florida, with its large population of wealthy retirees and loose financial regulations in the 1980s, became a particular focus for laundering the proceeds. Real estate purchases, particularly in Miami, were made with cash that had originated from the Brink gold. Luxury homes, commercial properties, and land investments all served as vehicles for converting stolen gold into apparently legitimate assets. The FBI became involved in the investigation because American financial institutions had been used in the laundering scheme. Federal agents worked with British authorities to trace the money flows and identify the American participants. This cooperation led to several arrests in the United States, though the most significant figures in the laundering network managed to avoid prosecution due to the complexity of proving their knowledge and intent. One American who became central to the investigation was a gold dealer in New York who had processed millions of dollars worth of the stolen gold. He claimed he believed the seller's documentation showing the gold was legitimate, but investigators suspected he'd known or should have known about its criminal origin. The case against him was complicated by questions about what constitutes due diligence in the gold trade and whether dealers have an obligation to investigate beyond verifying basic documentation. The investigation revealed weaknesses in international financial oversight. In the 1980s, it was far easier to move large sums of money between countries without triggering extensive scrutiny. Banks in different nations operated under different regulatory frameworks, and criminals exploited these gaps to move stolen proceeds around the globe. American law enforcement learned valuable lessons from the Brink case about international money laundering. It became clear that major crimes often had global dimensions, with money flowing across borders through legitimate financial channels. This realization contributed to enhanced international cooperation in financial investigations and eventually led to stricter banking regulations designed to detect and prevent money laundering. The case also highlighted how American financial institutions could become unwitting, or sometimes willing, participants in international crime. The gold dealers, real estate agents, bankers, and lawyers who processed transactions related to the Brink's MAT gold were often operating within legal bounds, making it difficult to prosecute them even when investigators suspected they should have known something was wrong. Only a fraction of the stolen gold was ever recovered, and much of the laundered money remains hidden or has been spent. Some estimates suggest that assets purchased with Brink's MAT proceeds are still circulating in the American economy today, their criminal origin long obscured by time and multiple legitimate appearing transactions. The American connection to the Brink's MAT robbery demonstrates how modern financial crime transcends borders. A robbery in London required American financial infrastructure to realize its full value. The criminals involved understood that the international financial system offered opportunities for those willing to exploit its complexities. Several Americans were eventually convicted of crimes related to laundering Brink's MAT proceeds, receiving prison sentences ranging from a few years to over a decade. But many others escaped prosecution, either because evidence was insufficient or because they'd operated in ways that, while suspicious, didn't clearly violate laws. The case remains legendary in both British and American law enforcement circles as an example of how a single large-scale crime can have tentacles reaching around the world. It showed that solving modern crimes often requires international cooperation, sophisticated financial analysis, and the willingness to follow money trails across multiple jurisdictions. For American banking, the Brink's MAT case was a wake-up call about the need for better monitoring of suspicious transactions. It contributed to the development of Know Your Customer regulations and anti-money laundering requirements that banks now follow. The idea that financial institutions have a responsibility to help prevent crime by monitoring and reporting suspicious activity can be traced in part to cases like this. Number 5. The Loomis Fargo Robbery, 1997. Sometimes the most daring robberies don't involve guns, masks, or elaborate break-ins. Sometimes they're executed by ordinary people who see an opportunity and make an extraordinary decision. The Loomis Fargo robbery of 1997, committed in Charlotte, North Carolina, falls into this category. A vault supervisor who simply loaded $17 million into a van and drove away, setting in motion a series of events that would captivate the nation. David Scott Gant wasn't a career criminal. He was a 27-year-old vault supervisor at Loomis Fargo, a company that transported cash between banks and businesses. He was considered reliable, if somewhat unremarkable, exactly the kind of person you'd want handling millions of dollars. But Gant was dissatisfied with his life, his marriage was failing, and he was susceptible to a scheme proposed by Kelly Campbell, a former Loomis Fargo employee with whom he was infatuated. Campbell had been fired from Loomis Fargo months earlier but maintained contact with Gant. Through conversations that grew increasingly conspiratorial, she introduced him to Steve Chambers, a small-time criminal with big ideas. Chambers proposed a plan. Gant would use his access to the vault to steal as much money as possible, and they would all split the proceeds. Gant would then flee to Mexico while the others laundered the money. Once things cooled down, Gant would receive his share and live out his days in comfort south of the border. The plan had obvious flaws, but Gant was blinded by infatuation with Campbell and the fantasy of a different life. He agreed to participate, and on the evening of October 4, 1997, he put the plan into motion. Gant was working the late shift at the Loomis Fargo facility, which meant he was the last employee in the building. At around 6:30 p.m., after his co-workers had left, he began loading cash into a company van. He worked methodically, stacking bundles of bills into the vehicle. The vault contained over $18 million that night, and Gant took nearly all of it, approximately $17.3 million in cash. The theft took several hours. Currency is heavy, and moving that much money requires physical effort. Gant filled the van until it was packed with cash, then drove it out of the facility using his authorized access. He triggered no alarms because he was doing exactly what he was authorized to do, moving a company vehicle with company funds. The difference was that this time, he wasn't delivering the money to a legitimate destination. Gant drove the van to a remote location where Chambers and associates were waiting. They quickly transferred the money to other vehicles, working in the darkness to avoid being seen. Once the transfer was complete, Gant abandoned the van and followed the plan's next step, fleeing to Mexico. He drove through the night, heading south toward the border. He'd been given some initial cash by Chambers, about $50,000, with promises that more would follow once he was safely out of the country. He crossed into Mexico the next day, settling in a beach resort town where he tried to blend in as just another American tourist. Back in Charlotte, the theft was discovered the next morning when employees arrived at the Loomis Fargo facility. The The vault had been cleaned out and the van was missing. Security footage showed Gant loading the money, making him immediately the primary suspect. The FBI was called in and the investigation began. Meanwhile, Chambers and his associates faced the challenge of laundering $17 million in cash. This is where the plan truly began to fall apart, because Chambers proved spectacularly incompetent at being a criminal mastermind. Rather than laying low and slowly laundering small amounts, he went on an immediate and obvious spending spree. Chambers bought a new BMW with cash. Then a new house. Then more vehicles. He paid for home improvements with cash, bought expensive furniture, and generally behaved in ways that couldn't help but attract attention. His wife, Michelle, was equally indiscreet, buying jewelry, art, and luxury goods. The couple, who had been working modest jobs just weeks earlier, suddenly appeared to be millionaires. Friends and family members who were let in on the secret also began spending conspicuously. Money that should have been hidden was instead being flaunted around Charlotte. Multiple people bought new vehicles with cash, made large deposits into bank accounts, and generally behaved in ways that screamed, "We suddenly have unexplained wealth." The FBI investigation quickly focused on Chambers. Agents interviewed neighbors who reported the suspicious spending, banks that had processed unusual cash deposits, and car dealerships that had sold vehicles for cash. The evidence piled up rapidly, and within weeks, investigators had identified most of the participants. Down in Mexico, Gant was becoming increasingly paranoid. He'd been watching CNN and saw reports about the robbery and the investigation. Chambers had promised to send more money but had only sent small amounts sporadically. Gant was running low on funds and felt increasingly isolated and vulnerable. In a series of phone calls, Gant confronted Chambers about the money he'd been promised. These calls were monitored by the FBI, giving investigators confirmation of the conspiracy and helping them locate Gant in Mexico. The FBI coordinated with Mexican authorities, and on March 1, 1998, less than 5 months after the robbery, Gant was arrested at a Playa del Carmen resort. He was extradited to the United States to face charges. Meanwhile, the FBI had arrested Chambers, Campbell, and several others involved in the plot. They recovered about $8 million in cash, along with numerous assets purchased with the stolen money. However, nearly $9 million remained missing, and suspicions were that Chambers had hidden it somewhere before his arrest. The legal proceedings revealed the full extent of the participants' incompetence. Chambers had kept records of his purchases, making the prosecution's job remarkably easy. Multiple participants cooperated with investigators, each trying to minimize their own sentences by testifying against others. Gant eventually pleaded guilty and cooperated with investigators, receiving a sentence of 7.5 years in prison. Chambers, as the principal organizer who'd benefited most from the scheme, received 11 years. Campbell and others received sentences ranging from probation to several years in prison, depending on their level of involvement. The case became famous not for its sophistication but for its absurdity. Here was one of the largest cash thefts in American history, executed successfully in its initial phase, but destroyed by the participants' inability to resist immediate gratification. Criminologists and law enforcement instructors used it as a teaching example of how not to commit a crime. The Loomis Fargo robbery also raised questions about corporate security and insider threats. How could a vault supervisor simply load millions into a van and drive away? The company implemented new procedures requiring multiple employees to be present during cash handling, enhanced surveillance systems, and more frequent audits. For Gant personally, the aftermath was a mixture of infamy and regret. He served his sentence and was released in 2006. In interviews afterward, he expressed remorse for his actions and acknowledged that he'd been foolish to think the plan would work. Number 6. The Great Plymouth Mail Truck Robbery, 1962. August 14, 1962, was an oppressively hot summer day in Plymouth, Massachusetts. The mail truck carrying cash from Cape Cod banks to the Federal Reserve in Boston was running its regular route, a journey it had made countless times before. Inside were 2 postal workers and approximately $1.5 million in small bills, the largest cash shipment most people would ever see. They had no idea they were being followed. The robbery had been planned for months by a crew led by John J. Kelly, a career criminal from the Boston area with connections to organized crime. Kelly wasn't interested in bank vaults or armored cars with their heavy security. He'd identified something more vulnerable: the routine transfer of cash between regional banks and the Federal Reserve, transported by lightly defended mail trucks. Kelly assembled a crew of 8 men, each with specific roles. Some were drivers, others would handle the actual robbery, and a few were positioned as lookouts. They'd been watching the mail truck route for weeks, timing its schedule, identifying potential interception points, and planning their escape routes. The spot they chose was along Route 3 near Plymouth, a stretch of road with relatively light traffic and good access to multiple escape routes. On that August afternoon, the mail truck was traveling north when a car suddenly pulled in front of it, forcing the driver to slow down. Before the postal workers could react, 2 more vehicles boxed them in from behind and the side. Men with guns emerged, moving quickly and purposefully. They weren't masked, a calculated risk based on the belief that the robbery would be executed so quickly that witnesses would have little time to observe details. The postal workers were ordered out of the truck at gunpoint. They complied immediately, understanding that resistance would be foolish. The robbers were professional and efficient, showing no interest in violence. They simply wanted the money, and they wanted it quickly before police could respond. 2 of the robbers jumped into the mail truck and drove it away, following a pre-planned route toward a remote location where they could transfer the cash. The remaining crew members disappeared into their vehicles, scattering in different directions to avoid being caught together. The entire robbery took less than 5 minutes. The postal workers were left unharmed by the roadside, able to immediately call for help. Within minutes, state police had been notified and roadblocks were being established throughout the region. But the robbers had anticipated this response and had chosen their routes carefully. They'd identified back roads and alternative paths that would let them avoid the major highways where police would be concentrating their efforts. At a prearranged location, an abandoned barn in a rural area, the crew regrouped and transferred the cash from the mail truck to several ordinary-looking vehicles. They set the mail truck on fire to destroy any evidence, then divided the money and dispersed again, each taking their share and heading in different directions. The investigation that followed was intensive. The FBI took lead jurisdiction because this was a federal crime, robbery of the U.S. mail. Agents interviewed witnesses, processed the burned-out mail truck for evidence, and began the painstaking work of tracking down the perpetrators. The postal workers provided descriptions, but the robbers had been wearing hats and sunglasses, making identification difficult. The break in the case came not from brilliant detective work but from the predictable weakness in most criminal conspiracies: human nature. One of the crew members, John J. Red Kelly, no relation to the mastermind, began spending his share of the money conspicuously. He bought a new car, moved to a better apartment, and generally lived beyond his previous means. Friends and associates noticed and some of them talked. Informants provided tips to the FBI, and investigators began focusing on known associates of John J. Kelly. They conducted surveillance, tapped phones with court authorization, and gradually built a picture of the conspiracy. The crew had included some career criminals whose identities were familiar to law enforcement, making it easier to develop suspects. One by one, crew members were identified and arrested. Some were caught with marked bills that could be traced to the robbery. Others were identified through witness descriptions and circumstantial evidence. As arrests were made, some participants began cooperating with investigators, providing details about the planning and execution of the robbery in exchange for reduced sentences. John J. Kelly, the mastermind, was arrested at his home in Boston. The evidence against him was substantial: testimony from cooperating crew members, financial records showing unexplained wealth, and physical evidence linking him to the planning of the robbery. He was convicted and sentenced to 20 years in federal prison. The other crew members received varying sentences based on their roles and level of cooperation. Those who'd actively participated in the robbery itself received longer terms, while those who'd played supporting roles got lighter sentences. In total, 7 of the 8 participants were eventually convicted and imprisoned. Only a portion of the stolen money was ever recovered. Some crew members had spent their shares before arrest, while others had hidden money so well that investigators couldn't locate it. The FBI estimated that perhaps $500,000 remained missing, likely hidden by participants who hoped to access it after their release from prison. The Plymouth mail truck robbery had lasting impacts on how cash was transported in the United States. The Postal Service implemented new security measures for mail trucks carrying valuable cargo, including armed guards for high-value shipments, more secure vehicles, and varied routes to prevent criminals from learning patterns. The Federal Reserve also changed its procedures for cash transfers, using armored car services more frequently and scheduling shipments less predictably. For law enforcement, the case reinforced the importance of informants and the inevitability of criminals making mistakes. The robbery itself had been well planned and efficiently executed, but the aftermath showed the usual pattern: Participants couldn't resist enjoying their wealth, and someone always talked. The FBI's patient investigative work, combined with these human factors, led to the case being solved within a year. The case also demonstrated the risks of non-violent robbery. While the crew had avoided using violence, no one was injured during the robbery. This didn't protect them from serious federal charges. The sentences they received were comparable to what they might have gotten for more violent crimes, reflecting the serious view federal prosecutors and judges took of interfering with the U.S. mail. Years later, some of the participants were released from prison and tried to rebuild their lives. A few returned to crime, their careers as criminals apparently not ended by their prison experience. Others went straight, having learned that the proceeds of crime rarely justified the cost. The money they'd stolen, divided among 8 people and largely spent or lost, had bought them years in prison and permanently damaged their prospects. Number 7. The Pierre Hotel Robbery, 1972. The Pierre Hotel stands on 5th Avenue in Manhattan, one of New York's most prestigious addresses. On January 2, 1972, it was home to some of the city's wealthiest residents and was hosting numerous affluent guests. The hotel's vault contained safety deposit boxes filled with jewelry, cash, and other valuables that guests and residents stored for safekeeping. It was, in essence, a treasure trove waiting for someone bold enough to attempt to rob it. That someone was Bobby Comfort, a career criminal with connections to organized crime. But Comfort didn't work alone. He assembled a crew of experienced thieves who would execute what became known as one of the most audacious hotel robberies in American history. The plan was ambitious. They would enter the Pierre Hotel during the day when it was full of guests and staff, take control of the building and systematically rob the vault. On the afternoon of January 2, around 3:30 p.m., 5 men entered the Pierre Hotel dressed in tuxedos and carrying what appeared to be musical instrument cases. They looked like musicians arriving to perform at one of the hotel's many events. This was exactly the impression they wanted to create. Wealthy guests and hotel staff barely gave them a second glance. But inside those instrument cases weren't clarinets or violins. They were firearms. And the men weren't musicians. They were Bobby Comfort and his crew, about to execute a robbery that would take over 4 hours and net them millions. Once inside, the crew moved quickly to take control. They produced their weapons and began systematically rounding up hotel guests, employees, and anyone else they encountered. People were ordered to lie on the floor in various locations throughout the hotel. The robbers were calm but firm, making it clear that cooperation was expected and resistance would not be tolerated. The hotel had over 700 rooms, and on that day there were approximately 300 people in the building: guests, staff, delivery people, and visitors. The crew couldn't control everyone, so they focused on key areas: the lobby, the vault area, and the main floors where most activity occurred. They posted lookouts at strategic points to watch for anyone entering the building or trying to use phones. With the main areas secured, the crew focused on their primary objective: the vault. They forced hotel employees to open it, gaining access to the safety deposit boxes inside. What they found exceeded their expectations. The boxes contained jewelry estimated to be worth millions: diamond rings, necklaces, bracelets, and other pieces that wealthy guests had stored. There was also substantial cash and other valuables. For the next several hours, the robbers methodically emptied box after box. They worked efficiently, sorting through the contents and taking anything of value. Some items were too distinctive to fence easily and were left behind, but most of the jewelry was small enough to transport and valuable enough to justify the risk. During this time, the hostages remained on the floor throughout the hotel. The robbers had warned them not to move or try to call for help. Remarkably, everyone complied. There was no violence, no injuries. The crew maintained control through their professional demeanor and the implicit threat of their weapons rather than through actual aggression. What made the robbery particularly audacious was its duration. They spent over 4 hours in the hotel, during which time additional guests attempted to check in, deliveries arrived, and the normal business of a busy Manhattan hotel continued outside. The crew had to manage each new arrival, adding them to the group of hostages and preventing anyone from raising an alarm. Finally, around 8 p.m., the robbers gathered their haul. Estimates later suggested they'd stolen between $10 to $27 million in jewelry and cash, though exact values were never confirmed, and prepared to leave. They'd loaded everything into bags and cases, and they'd done it all without triggering any alarms or alerting police. Before leaving, they made one final check of the hotel, ensuring that no one was in a position to immediately call for help. They warned the hostages to remain in place for at least 10 minutes after they left. Then, calmly and professionally, they walked out of the Pierre Hotel and disappeared into the New York evening. The hostages waited a few minutes as instructed, then chaos erupted. Multiple people called 911 simultaneously, and within minutes, police flooded the hotel. But the robbers were gone, having vanished into the city with one of the largest robbery hauls in New York history. The investigation was massive. The FBI and New York Police Department both worked the case, interviewing hundreds of witnesses. But the robbers had been careful. They'd worn gloves, left little physical evidence, and their professional execution suggested experienced criminals who knew how to avoid leaving traces. The break in the case came from an unexpected source. Bobby Comfort's girlfriend became angry with him over something unrelated to the robbery and provided information to investigators. She identified Comfort as the mastermind and provided details about the planning and execution of the robbery. This intelligence gave investigators the lead they needed. The FBI began surveillance on Comfort and his known associates. They tracked his movements, monitored his communications, and gradually built a case. Some of the stolen jewelry had been fenced through known channels, and investigators were able to trace some items back to the Pierre robbery. Over the following months, several crew members were arrested. Some were caught with stolen property, others were identified through witness descriptions, and a few were implicated by cooperating participants. But Bobby Comfort proved elusive. He went into hiding, apparently aware that investigators were closing in. Comfort remained a fugitive for several years, during which time the case remained open and active. The FBI maintained pressure, following leads and pursuing tips. Finally, in 1980, 8 years after the robbery, Comfort was arrested. He was convicted and sentenced to prison, though by that point, most of the stolen property had been sold, spent, or hidden beyond recovery. The Pierre Hotel robbery became legendary in criminal circles for its audacity and initial success. The crew had walked into one of Manhattan's most prestigious hotels in broad daylight, controlled it for hours, and walked out with millions. The execution had been nearly flawless, and only human factors, personal relationships, and the inevitable tendency of criminals to talk, led to their eventual capture. For the Pierre Hotel, the robbery was both a security disaster and a public relations challenge. Wealthy guests and residents needed to be assured that their valuables would be secure. The hotel installed new security systems, changed its vault access procedures, and hired additional security personnel. The measures were expensive but necessary to restore confidence. The victims of the robbery faced complex challenges recovering their losses. Some items were insured, but many wealthy individuals had stored valuables without proper documentation, making insurance claims difficult. Some didn't want to disclose what they'd stored for tax or other reasons. The exact total value of what was stolen has never been definitively established, with estimates ranging widely. The case also highlighted vulnerabilities in hotel security that existed throughout the luxury hotel industry. Number 8. The Securitas Depot Robbery, 2006. U.S. Banking Connections. The Securitas Depot in Tunbridge, Kent, England, was the site of what was then the largest cash robbery in British history. On February 21, 2006, a gang stole £53 million, approximately $92 million at the time. While this occurred in England, the case has significant American connections through the international investigation that followed and the methods used to launder proceeds through U.S. financial systems. The robbery was orchestrated with shocking brutality. The gang kidnapped the depot manager, Colin Dixon, along with his wife and young child. They held the family at gunpoint while forcing Dixon to grant them access to the cash storage facility. The criminals wore prosthetic makeup and disguises during the robbery, and they'd spent months planning every detail. Once inside the depot, with Dixon providing access under duress, the gang loaded approximately £53 million in cash into a large truck. The operation took several hours, during which the terrified employees were bound and guarded. When the robbers finally left, they released the Dixon family unharmed but traumatized, having successfully executed one of history's largest cash thefts. The American connection emerged in the investigation's later stages. The gang needed to launder the massive amount of stolen cash, and investigators discovered that some proceeds were being moved through American financial institutions. Money was smuggled out of Britain in small amounts by multiple couriers, then deposited into U.S. bank accounts controlled by money launderers with American connections. The FBI became involved because American banks had processed suspicious transactions related to the robbery. Federal agents worked with British authorities to trace money flows, identifying accounts in New York, Florida, and California that had received proceeds from the heist. Some of these accounts belonged to seemingly legitimate businesses that were actually fronts for money laundering operations. One method involved using American real estate investments to clean the money. Stolen cash was smuggled to the United States in luggage and packages, then used to purchase properties in Florida and Nevada. These properties would later be sold, with the proceeds appearing to be legitimate real estate profits rather than stolen money. American real estate, with its relatively loose requirements for cash purchases at the time, provided an attractive laundering vehicle. Another method involved American casinos, particularly those in Las Vegas and Atlantic City. Money launderers would purchase chips with cash, gamble minimally, then cash out and receive checks from the casino, effectively exchanging dirty cash for clean casino checks. These checks could then be deposited into banks with less scrutiny than cash deposits would receive. The investigation revealed a sophisticated international network of money launderers who specialized in moving criminal proceeds between countries. Several had dual citizenship or strong connections to both the US and Europe, allowing them to operate across borders. They used encrypted communications, shell companies, and complex transaction patterns designed to confuse investigators. American law enforcement's involvement in the case demonstrated the increasingly international nature of major crimes. What happened in a warehouse in Kent, England, required resources and cooperation spanning multiple countries to fully investigate. The FBI's financial crimes specialists worked alongside British police, sharing information and coordinating arrests. Several individuals in the United States were eventually arrested for their roles in laundering Securitas proceeds. They were charged with money laundering, conspiracy, and related financial crimes. Some cooperated with investigators, providing information about the broader network and how money was moved between countries. Their testimony helped authorities understand the full scope of the laundering operation. The primary perpetrators of the robbery itself were arrested in Britain and received substantial prison sentences, some over 20 years. But the money laundering network proved harder to completely dismantle. Authorities recovered only about half of the stolen money, with the remainder presumably still hidden or successfully laundered and spent. The case highlighted vulnerabilities in international financial systems that criminals exploit. Money can move around the world much faster than law enforcement can coordinate responses. Different countries have different banking regulations, and criminals take advantage of these inconsistencies to move money through jurisdictions with looser oversight. For American banking institutions, the Securitas case reinforced the importance of monitoring suspicious transactions and reporting them to authorities. Banks that processed transactions related to the robbery faced scrutiny about whether they'd done enough due diligence to detect money laundering. Some faced regulatory penalties for inadequate anti-money laundering procedures. The investigation also demonstrated the value of international law enforcement cooperation. British authorities couldn't have traced the money through American financial systems without FBI assistance. Similarly, American investigators needed British intelligence about the robbery itself to understand what they were looking for. The cooperation between agencies, while sometimes challenging due to different legal systems and procedures, proved essential to making progress on the case. Real estate professionals in the United States also learned lessons from the case. The ability of criminals to purchase properties with large cash payments without triggering significant scrutiny was identified as a vulnerability. This led to enhanced reporting requirements for real estate transactions, particularly those involving substantial cash and foreign buyers. The Securitas robbery and its American connections illustrate how modern financial crime operates globally. A robbery in England required American infrastructure to realize its full value for the criminals involved. The international financial system, designed to facilitate legitimate commerce, can also serve criminal purposes when exploited by sophisticated operators. Some of the stolen money has never been recovered and likely never will be. It may be hidden in offshore accounts, invested in assets under false names, or simply spent years ago in ways that can't be traced. The criminals who successfully laundered their shares likely moved on to other ventures, their involvement in Securitas hidden well enough to avoid prosecution. Number 9. The Carver Bank Robbery, 1997. In September 1997, the Carver Federal Savings Bank in Harlem, New York, experienced what appeared to be a routine robbery. 3 men entered, displayed weapons, and demanded money from tellers. They escaped with approximately $40,000, a significant amount but not unusual for a bank robbery in New York City. What made this case extraordinary wasn't the robbery itself, but who committed it and why. The leader of the robbery crew was Philip McGuire, a former New York City police officer. He'd left the force years earlier under circumstances that weren't entirely clear, and he'd since struggled financially. The other 2 men were also former law enforcement officers from various agencies. These weren't career criminals stumbling into a desperate act. They were trained professionals who understood exactly how bank robberies were investigated and what mistakes to avoid. McGuire had planned the robbery meticulously, using his knowledge of police procedures. He knew how long it would take for patrol cars to respond to a bank alarm. He understood how witnesses would be interviewed and what details they'd likely remember. He knew what security cameras would capture and how to minimize his crew's exposure. In essence, he planned the robbery specifically to exploit the weaknesses in the system he'd once served. The crew entered Carver Federal Savings at 2:15 p.m. on a Thursday, timing chosen because they knew the bank would have substantial cash after morning deposits but before afternoon pickups by armored cars. They wore simple disguises, baseball caps, sunglasses, and generic clothing. Nothing so elaborate as to draw attention before the robbery but enough to make identification difficult afterward. McGuire had given strict instructions to his crew: no unnecessary violence, work quickly, and stick to the plan. They approached the teller stations with calm authority, showing weapons but not brandishing them aggressively. The tellers, trained to comply during robberies, immediately began gathering cash from their drawers. One teller triggered the silent alarm as the crew had anticipated. McGuire had calculated that they had approximately 4 minutes before the first patrol car could arrive, even with lights and sirens. He'd timed the route from the nearest precinct multiple times and knew the traffic patterns. The robbery was designed to take no more than 3 minutes. The crew collected cash from multiple tellers, moving efficiently along the counter. They ignored the vault, knowing it would be time-locked and that attempting to access it would consume precious minutes they didn't have. The teller drawers contained enough money to make the risk worthwhile if they could escape cleanly. At exactly 2 minutes and 40 seconds after entering, McGuire signaled his crew to leave. They exited the bank at a fast walk, not running, which would draw attention, and proceeded to a vehicle parked nearby. Within seconds, they were driving away, heading toward a pre-planned route that would take them through areas where traffic cameras were sparse. As predicted, the first patrol car arrived at the bank 4 minutes and 15 seconds after the alarm was triggered. Officers found shaken but unharmed bank employees and began the standard robbery investigation. Security footage showed 3 men in generic disguises, and witness descriptions were vague at best. Based on the available evidence, it appeared to be a professional job, but not unusually so for New York City. What investigators didn't immediately realize was that they were dealing with someone who understood their methods intimately. McGuire had anticipated the investigation's trajectory and planned accordingly. The getaway vehicle was stolen and had been outfitted with false plates. It would be abandoned in a location where it wouldn't be discovered for several days. The crew would split up and dispose of clothing and other items that could link them to the robbery. The investigation proceeded routinely at first. Detectives interviewed witnesses, processed evidence, and reviewed security footage. The crew's professionalism was noted. They'd been calm, efficient, and avoided unnecessary risks. This suggested experience but didn't immediately point toward former law enforcement. The break in the case came from an unexpected direction. One of McGuire's crew members, Christopher Ham, had personal problems unrelated to the robbery. His girlfriend was angry about something and, during an argument, made a comment about him robbing banks, to someone who later told police. It was meant as an exaggeration born of anger, but it triggered an investigation. Detectives looking into Ham discovered his law enforcement background and financial problems. They also found evidence that he'd been spending money inconsistent with his reported income. When they began surveilling him, they observed meetings with McGuire and the third crew member, James Burton. All 3 had law enforcement backgrounds, all 3 had financial difficulties, and all 3 were behaving suspiciously. The FBI became involved, bringing additional resources and expertise in financial crimes. Agents tracked the money from the robbery, looking for unusual deposits or spending patterns. They found evidence that Maguire had used his share to pay off debts and make some modest purchases, but he'd been careful not to attract attention with lavish spending. The investigation took months, but gradually, evidence accumulated. Phone records showed the crew members in contact around the time of the robbery. Financial analysis revealed unexplained cash. Most damaging, forensic examination of the getaway vehicle, eventually discovered in a Brooklyn parking lot, yielded DNA evidence linking one crew member to the vehicle. When authorities had sufficient evidence, they moved to make arrests. Maguire was taken into custody at his home, along with Ham and Burton. All three were charged with bank robbery, conspiracy, and weapons offenses. The evidence against them was substantial, and facing long prison sentences, Ham agreed to cooperate with prosecutors. Ham's testimony filled in details that physical evidence couldn't provide. He described how Maguire had recruited him, how they'd planned the robbery using Maguire's law enforcement knowledge, and how they'd attempted to avoid investigation. His cooperation ensured his own conviction but also guaranteed that Maguire and Burton would be convicted as well. The trial was notable for the defendants' backgrounds. The prosecution emphasized that these were men who'd sworn to uphold the law but had betrayed that oath for money. The defense argued that financial desperation and personal problems had led to a terrible decision, but this argument had limited success with the jury. Maguire was convicted and sentenced to 15 years in federal prison. Burton received 12 years and Ham, because of his cooperation, received 8 years. All three lost any pension benefits they might have been entitled to from their law enforcement careers. Their families were devastated, and their reputations were permanently destroyed. The Carver bank robbery became a cautionary tale within law enforcement circles. It demonstrated that understanding police procedures could help criminals avoid capture temporarily, but it couldn't overcome basic investigative work and the human tendency to make mistakes. Number 10. The Isabella Stewart Gardner Museum Heist, 1990. March 18, 1990, was the early hours of the morning following St. Patrick's Day in Boston. The Isabella Stewart Gardner Museum, home to priceless art collected over decades, sat quiet in the Fenway neighborhood. 2 security guards were on duty monitoring the museum through the night. At 1:24 a.m., 2 men dressed as Boston police officers knocked on the museum's entrance, claiming they were responding to a disturbance call. This was the beginning of what would become the largest unsolved art theft in history, a robbery that, while not strictly a bank heist, involved the theft of assets worth an estimated $500 million. The case has never been solved, and the artwork has never been recovered, making it one of the most enduring mysteries in American crime. The security guard, seeing what appeared to be legitimate police officers, violated protocol and let them in. Once inside, the men immediately revealed their true purpose. They weren't police officers. They were thieves, and they were there for the museum's art collection. They quickly subdued both security guards, binding them with duct tape and handcuffs, then moved them to the basement where they couldn't interfere. With the guards secured and no alarm triggered, the thieves had somehow disabled or bypassed the security systems. They had the museum to themselves. For the next 81 minutes, they moved through the galleries, systematically selecting artwork. They weren't random in their choices. They knew what they wanted. They took 13 pieces in total, works by Rembrandt, Vermeer, Degas, Manet, and other masters. The pieces included The Concert by Vermeer, one of only 34 known works by the Dutch master. They took Rembrandt's The Storm on the Sea of Galilee, his only seascape. They took drawings, prints, and a bronze eagle finial from a Napoleonic flag. What's fascinating about their selections is both what they took and what they left behind. They passed by other works potentially more valuable or famous, suggesting either specific knowledge about what they wanted or instructions from someone who'd ordered particular pieces. Some items they took seem almost random, a bronze eagle, for instance, that was decorative rather than particularly valuable. The theft was discovered when the guards' relief shift arrived in the morning and found them bound in the basement. The empty frames hanging on the walls told the story of what had been taken. The FBI was called immediately, and what began was an investigation that continues to this day over 3 decades later. Investigators found that the thieves had cut some paintings from their frames, a method that causes damage but allows for quicker removal than dismounting the entire piece. They'd been careful to avoid some security measures but apparently unconcerned about others, suggesting they had some knowledge of the museum's systems but perhaps not complete information. The FBI brought in art crime specialists, who noted several puzzling aspects of the theft. The pieces taken were extremely valuable but also extremely difficult to sell. Stolen art of this prominence can't be sold on the open market, Any reputable auction house or dealer would immediately recognize them. This suggested the thieves either planned to ransom the art back to the museum or were working for a private collector willing to own masterpieces that could never be publicly displayed. The investigation pursued multiple theories. Some investigators believed it was the work of organized crime, possibly Boston's Irish or Italian mobs looking for assets they could use as leverage in criminal negotiations. Others thought it might be a theft commissioned by a wealthy collector somewhere in the world. Still others speculated about connections to international art smuggling rings. Over the years, numerous tips and leads have been pursued. In 2013, the FBI announced they believed they'd identified the thieves, though they declined to name them publicly and noted that both suspects were deceased. However, without recovered artwork or definitive proof, the case remains officially unsolved. Several people have been investigated intensely over the years. In the 1990s, attention focused on members of Boston's criminal underworld, particularly those with connections to art theft. Rumors circulated in criminal circles about who had the paintings, but nothing concrete emerged. In 2015, investigators focused on Robert Gentile, a Connecticut mobster with connections to organized crime figures in Boston. Authorities believed he had knowledge about the painting's location, and he was pressured to provide information. He denied involvement and never produced the art, though some investigators remained convinced he knew more than he admitted. He died in 2021 without revealing any secrets he might have held. The museum has never given up hope of recovery. They've offered a $10 million reward for information leading to the artwork's return, one of the largest rewards ever offered in an art theft case. They've kept the empty frames hanging in the galleries as placeholders, waiting for the day the stolen works might return. The investigation has revealed connections to various criminal enterprises over the years. Some evidence suggests the paintings may have been moved through networks involving drug trafficking, money laundering, and international smuggling. Pieces may have been separated, with individual works ending up in different locations. Some may have been damaged or even destroyed, though investigators hope this isn't the case. What makes this case particularly frustrating is that, unlike many crimes, there's an obvious pathway to resolution: returning the art. The museum has made clear they're primarily interested in recovering the works, not necessarily in prosecuting whoever returns them. Yet despite this incentive, the paintings remain missing. Theories about their location have ranged widely. Some believe they're in a private collection, perhaps in Europe or Asia, where a wealthy criminal or corrupt businessman enjoys them privately. Others think they may be hidden somewhere, held by someone who doesn't know how to monetize or return them without facing prosecution. Still others fear they may have been damaged or destroyed years ago, their loss permanent. The case has had lasting impacts beyond the immediate theft. Museum security nationwide was re-evaluated and upgraded. The practice of allowing police officers inside without verification was ended at most institutions. More sophisticated alarm and camera systems were installed. The art world became more aware of the vulnerability of even prestigious institutions. For the FBI's art crime team, the Gardner heist remains their most wanted case. They continue to follow leads, interview witnesses, and pursue any information that might lead to recovery. The case files span decades and fill rooms, containing thousands of pages of investigation notes, witness statements, and analytical reports. The Isabella Stewart Gardner Museum heist represents a perfect crime in one sense. The thieves escaped with masterpieces worth hundreds of millions and have never been definitively identified or caught. But it's also a crime without satisfaction, because the art can't be easily sold or publicly enjoyed. It exists in some private space, hidden from the world, serving no purpose beyond feeding someone's greed or obsession. The empty frames in the Gardner Museum serve as reminders not just of what was stolen, but of what remains possible. Number 11. The North Hollywood Shootout, 1997. February 28, 1997, began as an ordinary Friday morning in North Hollywood, California. Inside the Bank of America branch on Laurel Canyon Boulevard, customers were conducting routine transactions while employees processed the morning's business. Outside, two men sat in a white sedan, preparing for what they intended to be a quick bank robbery. What happened instead would become one of the most violent confrontations between criminals and police in American history. Larry Phillips Jr. and Emil Matasarianu weren't typical bank robbers. They were heavily armed militants who had spent months preparing for this robbery with military precision. They wore full-body armor, not just bulletproof vests but armored suits covering their entire bodies. They carried fully automatic rifles that had been illegally modified, along with thousands of rounds of ammunition. They'd studied the bank's layout, timed police response patterns, and prepared for a sustained firefight if necessary. At 9:17 a.m., Phillips and Matasorianu entered the bank wearing ski masks and their armor. They immediately fired shots into the ceiling to establish control, shouting commands at customers and employees to get down on the floor. The sound was deafening and the message was clear. This was not going to be a quiet robbery. The two men moved with practiced efficiency toward the vault area, forcing employees to open it at gunpoint. They began loading cash into bags they'd brought, working quickly but not frantically. They seemed confident, almost casual, as if they'd done this many times before, and indeed, investigators would later discover they'd committed previous robberies. What Phillips and Matasorianu didn't know was that a silent alarm had been triggered immediately when they entered. The Los Angeles Police Department received the alert within seconds, and patrol units were dispatched. In a city with as many police resources as Los Angeles, response times are measured in minutes, not the longer periods that might occur in smaller communities. At 9:24 a.m., just 7 minutes after the robbery began, the first LAPD patrol cars arrived on the scene. Officers took positions around the bank, preparing for what they assumed would be a standard bank robbery situation. They anticipated that the robbers, seeing police outside, would either surrender or take hostages. They were completely unprepared for what actually happened. Phillips and Matasorianu emerged from the bank, saw the police and immediately opened fire. Not warning shots, not suppressing fire, but sustained automatic weapons fire directed at police officers and their vehicles. The sound was unlike anything the officers had experienced, fully automatic rifles firing armor-piercing rounds that tore through police cars like paper. The officers returned fire with their service weapons, 9mm pistols and .38 Revolins that were standard issue at the time. But their bullets had almost no effect on the robbers' armor. Round after round hit the suspects, and they barely flinched, protected by their military-grade body armor. Meanwhile, the robbers' armor-piercing ammunition was penetrating police vehicles and body armor, wounding officers who'd thought they were in safe positions. The firefight quickly escalated into something resembling a war zone. More LAPD units arrived, and soon dozens of officers were engaged in the shootout. The robbers moved through the street, firing constantly, changing positions and showing no sign of surrendering. They moved toward their getaway vehicle, firing at police the entire time, seemingly invincible. Television news helicopters arrived and began broadcasting the scene live. Millions of viewers watched in real time as what looked like a military battle unfolded on the streets of Los Angeles. Officers could be seen taking cover behind vehicles while robbers in full armor advanced, firing automatic weapons. It was surreal and terrifying. The LAPD faced a critical problem. Their standard-issue weapons were completely inadequate against the robbers' armor. Recognizing this, officers began commandeering weapons from a nearby gun store, taking AR-15 rifles that had more power than their service weapons. Some officers retrieved their personal rifles from their vehicles. The police were effectively forced to upgrade their weaponry mid-battle. Matasorianu made it to the getaway vehicle, a white sedan they planned to use for escape. But police fire had damaged the vehicle and it wouldn't start. Abandoning it, he attempted to carjack a pickup truck, shooting at the driver to force him out. Police concentrated their fire on him and finally shots to his unarmored legs brought him down. He collapsed on the street, wounded and unable to continue. Phillips, meanwhile, had been separated from his partner. He continued fighting, moving down the street while firing at police. But he too was accumulating wounds, shots that penetrated the gaps in his armor or hit unprotected areas like his hands and legs. Blood loss and accumulated damage were taking their toll. Eventually, Phillips ducked behind a truck, apparently to reload or reassess his situation. At this moment he sustained a gunshot wound to his hand that severed an artery. Bleeding rapidly and realizing his situation was hopeless, Phillips placed his rifle under his chin and fired a final shot. He died instantly, ending his portion of the firefight approximately 44 minutes after it had begun. Matasorianu, wounded and surrounded, was still alive when officers approached. He was bleeding from multiple leg wounds and despite his armor, he needed immediate medical attention. However, the ambulance was blocked from approaching due to the ongoing uncertainty about whether the scene was truly secure. In a controversial decision, officers waited for a SWAT team to arrive and secure the area before allowing paramedics to approach. By the time medical personnel reached Matasorianu, he had bled out from his wounds. He died at the scene approximately 70 minutes after the robbery began. The aftermath of the North Hollywood shootout was sobering. 11 officers and 7 civilians had been wounded, though miraculously, no one except the two robbers had been killed. The scene looked like a war zone with hundreds of bullet holes in buildings, vehicles, and street infrastructure. Over 2,000 rounds had been fired, most of them by the robbers. The investigation revealed the extent of Phillips and Matasareanu's preparation. They'd acquired their weapons illegally, modified them to fire fully automatically, and assembled their armor from commercially available materials. They'd committed previous robberies to fund their arsenal and had apparently planned to continue robbing banks indefinitely, treating it as a military-style operation rather than opportunistic crime. Both men had troubled backgrounds. Phillips had a history of criminal activity and had served time in prison. Matasareanu had immigrated from Romania and had struggled to establish himself legally. Together, they'd formed a partnership that combined technical skill with ruthless willingness to use violence. The shootout had immediate impacts on law enforcement nationwide. The LAPD and police departments across the country recognized that their officers were not adequately armed to deal with heavily armored criminals. Within months, patrol cars were being equipped with rifles, AR-15s and similar weapons that could penetrate body armor. Number 12. The Stopwatch Gang Bank Robberies, 1970s to 1980s. In the late 1970s and early 1980s, a series of bank robberies across the United States and Canada puzzled law enforcement. The robberies were executed with remarkable speed and precision. Criminals would enter a bank, announce the robbery, collect money, and be gone in less than 2 minutes. They earned their nickname, the Stopwatch Gang, because of their obsessive timing and efficiency. The ringleader, Patty Mitchell, treated bank robbery like a professional craft to be perfected. Mitchell wasn't a typical criminal. He was intelligent, charismatic, and approached robbery with a businessman's mentality. He believed that speed was the key to success. If you could get in and out of a bank before police could respond, you dramatically increased your chances of escape. His philosophy was simple: practice, plan, time everything, and execute with discipline. The gang consisted of 3 primary members: Patty Mitchell, Lionel Wright, and Stephen Reed. Each brought specific skills to the operation. Mitchell was the planner and leader, Wright was the driver who planned escape routes, and Reed was the vault man who understood bank security systems. Together, they formed one of the most successful bank robbery crews in North American history. Their methods were consistent across dozens of robberies. They would spend weeks studying a target bank, observing employee patterns, customer traffic, and security measures. They timed everything: how long it took tellers to open drawers, how long before a silent alarm would bring police, what the traffic patterns were like at different times of day. On the day of a robbery, they would enter the bank at a precisely chosen moment, usually mid-morning or early afternoon when the bank had substantial cash but wasn't overly crowded. Mitchell would announce the robbery clearly and calmly, telling everyone to remain still and cooperate. There was no shouting, no unnecessary theatrics. He treated it like a business transaction that just happened to be illegal. While Mitchell controlled the room, Reed would vault over the counter and collect money from teller drawers. They didn't waste time on the vault. That took too long. The teller drawers contained enough cash to make the risk worthwhile, and accessing them took seconds rather than minutes. Reed was fast and efficient, knowing exactly how to grab bundled bills quickly. Throughout the robbery, Mitchell would periodically check his stopwatch. At the 90-second mark, he would signal Reed regardless of how much money they'd collected. At 2 minutes, they were leaving whether they had thousands or tens of thousands of dollars. The discipline was absolute. No robbery lasted longer than 2 minutes inside the bank. Wright would be waiting outside in a carefully positioned vehicle with the engine running. The moment Mitchell and Reed emerged, they'd enter the vehicle, and Wright would execute a pre-planned escape route. These routes were studied meticulously, with multiple alternatives depending on traffic and police response. Wright knew every back street, alley, and shortcut in the area. After escaping the immediate area, they would swap vehicles at a prearranged location, transferring to a different car that hadn't been spotted near the bank. This vehicle would be completely legal and unassuming, properly registered, no traffic violations, nothing that would give police a reason to stop them. They'd then drive away at normal speed, looking like ordinary citizens going about their day. The Stopwatch gang committed an estimated 100 robberies over a decade, stealing millions of dollars. What's remarkable is how long they operated successfully. Most bank robbers are caught within a few robberies, but the Stopwatch gang's discipline and professionalism allowed them to continue for years. They were careful with their money, avoiding the lavish spending that catches many criminals. They lived comfortably but not ostentatiously, understanding that sudden wealth attracts attention. They maintained regular lives between robberies with jobs and relationships that provided cover and legitimacy. The gang operated across multiple jurisdictions, hitting banks in various U.S. states and Canadian provinces. This created coordination challenges for law enforcement, as different agencies had pieces of the puzzle but no one had the complete picture. The gang's consistent methods eventually helped link the robberies, but identifying the perpetrators remained difficult. Their success began to unravel due to a combination of factors. First, law enforcement agencies began sharing information more effectively, recognizing that the similar methods suggested a single crew. The FBI created a task force to coordinate investigation of the robberies, bringing together evidence from multiple jurisdictions. Second, the gang's success made them somewhat complacent. After dozens of successful robberies, they began taking slightly more risks, cutting corners in their planning and spending money a bit more freely. These small changes accumulated over time, creating vulnerabilities. The break came when Reed was arrested in Arizona after a robbery in 1980. He was carrying identification that linked him to other robberies, and his arrest gave investigators their first solid lead. Reed eventually provided information about the gang's operations, though he didn't immediately identify his partners. Mitchell and Wright continued robbing banks for several more years after Reed's arrest, but the net was closing. In 1994, after numerous robberies and several narrow escapes, Mitchell was finally arrested. Wright was captured separately. Both men faced extensive charges covering years of robberies across multiple jurisdictions. The legal proceedings were complex, involving charges in both the United States and Canada. Mitchell and Wright were eventually convicted of multiple counts of bank robbery and received substantial prison sentences. Reed, who'd been arrested earlier and had cooperated to some extent, received a somewhat shorter sentence. What makes the Stopwatch gang particularly interesting is their professionalism and longevity. They treated bank robbery as a profession, continually refining their methods and learning from each job. Their 2-minute rule, while sometimes meaning they left money behind, was key to their success. It kept them ahead of police response times and minimized their exposure. Mitchell later reflected on his criminal career in interviews, explaining his philosophy about bank robbery. He viewed it as a profession requiring skill, discipline, and intelligence. He expressed no remorse about stealing from banks, which he saw as wealthy institutions that could absorb the losses. However, he emphasized that violence was always to be avoided. They never hurt anyone during their robberies, and he considered that a point of pride. The gang's story has been the subject of books and documentaries, fascinated by how 3 men could successfully commit so many robberies over such an extended period. Their methods influenced other criminals, though few could match their discipline and planning. For law enforcement, the Stopwatch gang demonstrated the importance of interagency cooperation. The gang operated successfully partly because they crossed jurisdictional boundaries, making it difficult for any single agency to track them. Once agencies began sharing information and coordinating investigations, the gang's success rate declined. Banks also learned lessons from the Stopwatch gang's methods. Number 13. The South Carolina Bank Hostage Crisis, 1976. On the morning of November 12, 1976, 4 armed men walked into the Charleston County Bank in South Carolina with a plan that would shock the nation. This wasn't going to be a quick in-and-out robbery. The men, led by an individual named William Griffin, intended to take hostages and use them as leverage to secure a massive ransom and safe passage out of the country. What followed was a 3-day hostage crisis that gripped the nation and tested law enforcement's ability to resolve such situations without loss of life. Griffin and his accomplices entered the bank just as it opened, immediately brandishing weapons and taking control. There were approximately 20 people in the bank at that moment, employees arriving for work and a few early customers. The gunmen quickly gathered everyone into a central area, making clear that they were now hostages and that cooperation was expected. Griffin announced his demands. He wanted $2 million in cash, a plane to fly them out of the country, and a guarantee of safe passage to a nation without extradition treaties with the United States. He made clear that if his demands weren't met, hostages would be harmed. To emphasize his seriousness, he had his men bind several hostages and position them near windows where police could see them. Law enforcement response was immediate but careful. The Charleston Police Department established a perimeter around the bank, preventing the gunmen from leaving but also avoiding any action that might trigger violence against hostages. The FBI was called in, bringing hostage negotiation specialists who began the delicate process of communicating with the gunmen. Hostage situations were handled differently in 1976 than they are today. The modern protocols for negotiation, SWAT responses, and crisis management were still being developed. The The Charleston hostage crisis would become one of the cases that helped shape those protocols, teaching law enforcement valuable lessons about patience, communication, and tactical planning. Inside the bank, the hostages faced terrifying uncertainty. They were bound and guarded, unsure whether the gunman would carry out their threats. Some hostages were released periodically as gestures of good faith during negotiations, but others remained, including several bank employees the gunman considered most valuable as leverage. The negotiation process was painstaking. FBI negotiators spoke with Griffin repeatedly, trying to establish rapport and find ways to de-escalate the situation. Griffin was adamant about his demands, but negotiators worked to keep him talking, knowing that as long as dialogue continued, there was less likelihood of violence. Media coverage of the crisis was extensive. Television news crews set up outside the bank, broadcasting updates throughout the day. The nation watched as the standoff continued, hour after hour, with no clear resolution in sight. The hostages' families gathered at the scene, desperately hoping for their loved ones' safe release. Behind the scenes, law enforcement was preparing tactical options. SWAT teams studied the bank's layout, looking for ways to enter if negotiations failed and hostages' lives were in immediate danger. But everyone understood the risks. Any tactical assault could result in hostages being killed, either by the gunman or caught in crossfire. As the first day stretched into the second, the atmosphere grew more tense. Griffin and his accomplices were showing signs of stress and fatigue. They hadn't planned for such an extended siege and were running low on food and water. Negotiators used this to their advantage, offering supplies in exchange for the release of more hostages. Several hostages were released on the second day, reducing the number inside to about a dozen. Each release was carefully negotiated, with the gunman extracting promises of consideration in exchange. FBI negotiators were careful not to make commitments they couldn't keep, but they worked to create a perception of progress and good faith. On the third day, the situation reached a critical point. Griffin was becoming increasingly agitated, realizing that his demands weren't going to be met. Authorities had made clear they wouldn't provide a plane or allow the gunman to escape. The standoff had to end, and the question was whether it would end peacefully or violently. FBI negotiators intensified their efforts, working to convince Griffin that his best option was peaceful surrender. They emphasized that no one had been hurt yet, which would work in his favor during prosecution. They painted a picture of a future where he could eventually return to freedom if he ended this peacefully, versus a violent outcome that would guarantee life imprisonment or death. The tactical teams remained on standby, prepared to enter if negotiators gave the signal that talks had broken down. But the preference was always for a negotiated solution, and the negotiators continued working every angle they could find. Finally, after 72 hours, Griffin agreed to surrender. The terms were simple. All hostages would be released unharmed, and the gunmen would give themselves up to FBI custody. In exchange, the FBI agreed to ensure their safety during arrest and transport, protection from any potential vigilante action by angry citizens or aggressive law enforcement. The surrender was executed carefully. Hostages were released first, emerging from the bank exhausted and traumatized but physically unharmed. They were immediately taken to medical evaluation and debriefing. Once all hostages were confirmed safe, the four gunmen emerged with hands raised, surrendering to FBI agents who took them into custody without incident. The relief was palpable. A situation that could easily have ended in tragedy had been resolved without a single injury. The Charleston hostage crisis was hailed as a success for negotiation tactics and patient law enforcement work. The legal proceedings that followed were straightforward but serious. Griffin and his accomplices faced federal charges including bank robbery, kidnapping, and weapons offenses. The fact that no hostages had been harmed was considered in sentencing, but the severity of the crime, holding people hostage for 3 days, meant substantial prison terms were inevitable. Griffin received a 30-year sentence, while his accomplices received sentences ranging from 15 to 25 years depending on their roles. None expressed remorse during the trial, maintaining that they'd been driven to desperate measures by economic circumstances. The judge was unmoved by these arguments, noting that many people face financial hardship without resorting to taking innocent people hostage. For the hostages, the aftermath was challenging. Many suffered from what we now recognize as post-traumatic stress disorder, experiencing nightmares, anxiety, and difficulty returning to normal life. The bank provided counseling services, but for some, the psychological scars lasted for years. The Charleston hostage crisis had lasting impacts on how law enforcement handles such situations. The FBI studied the case extensively, incorporating lessons learned into their training programs for negotiators. The importance of patience, maintaining dialogue and avoiding premature tactical action became central tenets of hostage negotiation doctrine. Banks also changed their security protocols in response. The idea that a bank could be taken over and held for days raised concerns about vulnerability to extended sieges. Number 14. The Hatton Garden Safe Deposit Burglary, 2015. American Connections. Over the Easter weekend of 2015, a group of elderly criminals in London executed one of the most audacious burglaries in British history, breaking into the Hatton Garden Safe Deposit Company and stealing an estimated £14 million, approximately $20 million, in cash, jewelry, and valuables. While this crime occurred in England, its tentacles reached into American financial markets and jewelry trading networks, making it relevant to any discussion of international heists with U.S. connections. The gang consisted of career criminals, most in their 60s and 70s, men who'd spent decades in London's criminal underworld. The ringleader, Brian Reader, was 76 years old and had been involved in major crimes for most of his adult life. His crew included John Kenny Collins, Daniel Jones, Terry Perkins, and others, each bringing decades of criminal expertise to the operation. They chose the Easter holiday weekend deliberately, knowing that businesses would be closed for 4 days, giving them an extended window to work without interruption. On Thursday evening, they entered the Hatton Garden Safe Deposit building through a shared service entrance, disabling alarms and making their way to the vault area in the basement. The vault was protected by reinforced walls, but the elderly criminals had a plan. They'd brought a heavy-duty diamond-tipped drill capable of boring through concrete and steel. 4 hours they worked to create a hole large enough for a person to squeeze through. The work was physically demanding, especially for men their age, and they had to take frequent breaks. By Friday evening, they'd created an opening into the vault. The plan was proceeding successfully, but then they encountered an unexpected problem. The drill they'd been using broke. They couldn't continue without it, and they couldn't acquire a replacement until after the holiday weekend. Reluctantly, they left the building, planning to return once they'd obtained new equipment. On Saturday, while businesses remained closed, the crew regrouped and obtained a replacement drill. That evening they returned to the building and resumed their work. This time they completed the breach, creating a hole large enough for the smaller members of the crew to enter the vault. Inside they found rows of safety deposit boxes, each potentially containing valuable contents. They began forcing boxes open one by one, using crowbars, drills, and other tools. The work continued through the night and into Easter Sunday. They filled bags with cash, jewelry, gold, and other valuables, accumulating millions of pounds worth of stolen property. The American connection emerged in how the stolen goods were fenced and laundered. High-value jewelry from the Hatton Garden burglary began appearing in international markets, including among American dealers and auction houses. Some pieces were sold to American collectors, often through intermediaries who obscured their origin. The international jewelry trade, with its sometimes loose documentation requirements, facilitated the movement of stolen goods across borders. Cash proceeds from selling jewelry were laundered through various channels, including American financial institutions. Money was moved through shell companies, offshore accounts, and legitimate-appearing businesses that had connections to both the UK and US. Some funds were invested in American real estate, particularly in Florida and Nevada, where cash purchases of property raised fewer questions than in other states. The FBI became involved when American dealers reported suspicious jewelry being offered for sale. Some pieces were too distinctive or valuable to have entered the market through normal channels. When descriptions matched items reported stolen from Hatton Garden, American and British authorities began coordinating their investigations. The burglary wasn't discovered until Tuesday morning when employees returned to work after the holiday weekend. They found the vault breached and dozens of safety deposit boxes emptied. The scale of the theft was immediately apparent and police were called. Scotland Yard began one of their most intensive investigations in years. The investigation quickly focused on London's aging criminal community. The sophistication of the burglary suggested experienced thieves, and the timing suggested people who understood how to exploit the holiday weekend. Investigators reviewed security camera footage from surrounding businesses and began tracking known associates of career criminals. The gang had made several crucial mistakes. Security cameras had captured their images arriving and leaving the building. They'd used a vehicle that could be traced. And most critically, they talked. Conversations captured on police surveillance provided damaging evidence of their involvement and their plans to divide the spoils. Within months, several members of the gang were arrested. Police recovered some of the stolen property during searches of their homes and storage units, but much remained missing. Some gang members had already disposed of their shares, selling jewelry and hiding cash in locations police couldn't discover. The trials revealed the extent of American involvement in laundering proceeds. Several individuals in the United States were investigated for their roles in selling stolen jewelry or facilitating money transfers. Some faced charges in American courts for receiving stolen property or money laundering, though proving knowledge of the item's criminal origin was challenging. Brian Reeder and several of his accomplices were convicted and received substantial prison sentences, some over 10 years despite their advanced ages. The judge showed little sympathy for their age, noting that they were experienced criminals who'd planned and executed the burglary with full knowledge of what they were doing. The Hatton Garden burglary highlighted vulnerabilities in the safety deposit box industry that existed on both sides of the Atlantic. Many facilities had outdated security systems inadequate against determined, experienced thieves. The incident prompted industry-wide reviews of security measures, with many companies upgrading alarms, cameras, and physical barriers. For American jewelry dealers and auction houses, the case reinforced the importance of due diligence when acquiring valuable pieces. The fact that Hatton Garden jewelry had entered American markets through legitimate-seeming channels demonstrated that even reputable businesses could unknowingly handle stolen property. This led to enhanced verification procedures and increased cooperation with international law enforcement. The international aspects of the case also demonstrated the importance of cross-border law enforcement cooperation. British investigators needed American assistance to track money and property that had crossed the Atlantic. American investigators needed British intelligence about the burglary itself. The cooperation, while sometimes challenging due to different legal systems, proved essential to understanding the full scope of the crime. Only a fraction of the stolen property was ever recovered. Much of the jewelry was broken down, with precious stones removed from settings and sold separately to avoid identification. Some pieces likely remain in American collections today, their criminal origin unknown to current owners who purchased them in good faith through seemingly legitimate channels. Number 15. The Baker Street Robbery, 1971. American Intelligence Angle. In September 1971, a gang of thieves broke into the Lloyds Bank branch on Baker Street in London, tunneling into the vault from a nearby shop and stealing approximately £3 million, worth over $50 million today, from safety deposit boxes. While this occurred in Britain, the case has fascinating American connections involving intelligence agencies, international intrigue, and rumors that have never been fully resolved. The robbery itself was technically brilliant. The gang rented a shop 2 doors down from the bank and spent weeks digging a tunnel through the basement, under a neighboring restaurant and into the bank's vault. They worked at night, removing dirt and timing their activities to avoid detection. The tunnel was approximately 40 feet long and required sophisticated planning to ensure it didn't collapse or break through in the wrong location. On the weekend of September 11, 1971, the gang entered the bank vault through their tunnel and began opening safety deposit boxes. They worked for an entire weekend, methodically forcing boxes open and taking their contents. The haul included cash, jewelry, and other valuables, along with some items whose nature has never been publicly disclosed. What made this robbery particularly intriguing was a detail discovered during investigation. A radio ham operator had accidentally intercepted the gang's walkie-talkie communications during the robbery. He'd heard them discussing their progress and had alerted police, but due to confusion about the location, police had searched the wrong banks and didn't discover the Baker Street robbery until Monday morning when employees returned to work. The American angle emerged from rumors that began circulating shortly after the robbery. According to these rumors, one of the safety deposit boxes belonged to someone connected to British intelligence services and contained photographs that were politically sensitive. Some versions suggested the photos involved members of the British royal family, while others hinted at compromising material related to government officials. The most persistent rumor involved Michael X, a London-based criminal and self-styled revolutionary who had connections to American civil rights movements and had visited the United States multiple times. Supposedly, Michael X had stored compromising photographs in a safety deposit box at the Baker Street branch, photos that could embarrass or blackmail prominent individuals. The robbery may have been partially motivated by the desire to retrieve these specific items, with the other stolen property serving as a cover. Where American intelligence allegedly enters the picture is through claims that U.S. agencies were aware of the compromising materials and possibly even facilitated or encouraged the robbery to prevent the materials from being used for blackmail or political purposes. These claims have never been substantiated, and official sources deny any such involvement, but the rumors persist. What's documented is that the British government placed a gagging order on the media, preventing extensive reporting about what was stolen from the bank. This unusual action fueled speculation that something more than ordinary theft was involved. If it was just a typical robbery, why would the government care about media coverage? The investigation eventually led to the arrest of several gang members, including Anthony Gavin, who was believed to be the mastermind. However, the legal proceedings were notably restrained in terms of what was discussed publicly. Details about specific items stolen were kept vague, and certain aspects of the case were simply not addressed in open court. Michael X's connection to the case remains murky. He was arrested on unrelated charges in Trinidad and Tobago and eventually executed there for murder in 1975. Whether he had actually stored compromising materials in the Baker Street Bank, and whether American intelligence had any interest in retrieving them, has never been proven. The convicted robbers served their sentences and were eventually released. Most maintained silence about specific items they'd stolen, either out of criminal discretion or because they'd been pressured to keep quiet. The gagging order remained in effect for years, and even after it was lifted, full details about the robbery's contents were never publicly disclosed. The American intelligence angle, while unproven, reflects the reality that major crimes sometimes intersect with intelligence operations. During the Cold War era, intelligence agencies from various countries were involved in numerous covert operations, and it's not impossible that something like the Baker Street robbery could have had intelligence dimensions that remain classified. What is documented is that American investigators showed unusual interest in the case, requesting information from British authorities and apparently conducting their own inquiries into certain aspects. Whether this was routine cooperation on an international crime or something more significant remains unclear. The Baker Street robbery stands as one of the most professionally executed heists in British history, but its true significance may lie in what was stolen rather than how much. If the rumors about compromising materials and intelligence involvement are true, it represents something far more complex than a simple bank robbery. It becomes a story about power, blackmail, and the lengths to which individuals and possibly governments will go to protect secrets. For American researchers and crime historians, the Baker Street robbery remains a fascinating case precisely because so many questions remain unanswered. The documented facts are impressive enough. A sophisticated tunnel, a weekend-long burglary, millions in stolen property. But the hints of deeper intrigue involving international intelligence make it one of the most mysterious heists in history. The case also demonstrates how robbery investigations can reveal unexpected connections and complications. What begins as a straightforward property crime can expand into something involving politics, intelligence, and international relations. The fact that certain details remain officially secret decades later only fuels continued speculation and interest. Number 16. The Brink's Robbery in Boston, 1950. January 17, 1950, was a cold winter evening in Boston's North End. The Brink's building on Commercial Street was winding down from another day of handling millions of dollars in cash and securities. Brink's was one of the most respected armored car and security companies in America, trusted by banks and businesses to protect their valuables. But on this night, that reputation would be shattered by what became known as the crime of the century. The robbery was the result of meticulous planning by a crew of 11 men led by Anthony "Fats" Pino, a career criminal who'd spent years studying the Brink's operation. Pino had become obsessed with robbing Brink's, convinced that despite their reputation for security, they had vulnerabilities that could be exploited. He recruited a team of experienced criminals from the Boston area, each bringing specific skills to the operation. The planning phase lasted nearly 2 years. The gang members took jobs that allowed them to observe the Brink's building, noting employee schedules, security procedures, and money handling routines. They learned when the largest amounts of cash were on hand and when the building was most vulnerable. They even managed to obtain keys to various doors by making impressions during brief access to the building. On the night of the robbery, 7 members of the crew entered the Brink's building wearing Halloween masks and matching pea coats, making them look almost comical despite the serious crime they were committing. They'd chosen this particular evening because they knew a large shipment of cash had arrived earlier and would be stored in the vault overnight. The gang moved through the building using their copied keys, encountering minimal resistance. The few employees working late were quickly subdued and tied up. The robbers were calm and professional, giving clear instructions and avoiding unnecessary violence. They knew exactly where they were going and what they wanted. When they reached the vault room, they found 5 employees counting money. These workers were quickly bound and placed on the floor. The vault itself was open, another result of the gang's careful timing. They'd struck at a moment when employees were actively working with the cash, meaning security measures were temporarily relaxed. For the next 20 minutes, the gang systematically loaded cash and securities into bags they'd brought. They worked efficiently, taking everything of value they could carry. The total haul was staggering. Approximately $1.2 million in cash and $1.6 million in securities, totaling $2.8 million, equivalent to over $30 million today. It was the largest robbery in American history at that time. The gang left the building as smoothly as they'd entered, loading their bags into a truck and driving away into the Boston night. The bound employees were discovered shortly afterward when other workers arrived, and police were called immediately. The scale of the robbery was immediately apparent, and the FBI took over the investigation the next day. What followed was one of the most intensive criminal investigations in FBI history. Agents interviewed thousands of people, followed countless leads, and pursued tips from across the country. But the gang had planned well, and initially investigators had little to go on. The gang members had carefully avoided leaving fingerprints, and their identical disguises made identification difficult. The stolen securities proved difficult for the gang to monetize. Securities can be traced, and attempting to cash them would expose the perpetrators. Most of the securities were eventually abandoned or hidden, their value unrealizable. The cash, however, was a different matter. Over $1 million that could be spent if the gang exercised patience and discretion. The gang had agreed to lie low for several years, allowing the investigation to cool before spending their shares. They divided the cash and went their separate ways, maintaining minimal contact to avoid arousing suspicion. For a while the plan worked. The investigation continued but made little progress, and the case began to grow cold. But maintaining discipline among 11 criminals proved impossible. Some gang members began spending money more freely than they should have, buying new cars and homes that didn't match their supposed income. Others told confidants about their involvement, unable to resist bragging about pulling off such a major heist. These small indiscretions began creating threads that investigators could follow. The break came in 1956, 6 years after the robbery, when one of the gang members, Joseph Specs O'Keefe, had a falling out with the others over his share of the money. Feeling cheated and angry, O'Keefe began cooperating with the FBI, providing detailed information about the robbery's planning and execution. His testimony gave investigators the evidence they needed to move against the entire crew. In January 1956, just days before the statute of limitations would have expired on the robbery, the FBI arrested 8 members of the gang. O'Keefe's testimony was devastating, providing details that only someone directly involved could know. He described the planning, the execution, and what had happened to the money. In exchange for his cooperation, he received a reduced sentence. The trials were sensational, dominating headlines across the country. The American public was fascinated by the audacity of the crime and the years-long investigation that had finally brought the perpetrators to justice. The defendants' lawyers tried various defenses, but O'Keefe's testimony, combined with physical evidence and circumstantial details, was overwhelming. 8 men were convicted and received life sentences. Some of the cash was recovered during searches, but the majority was never found, presumably spent during the 6 years between the robbery and the arrests. The securities, largely worthless to the thieves, were eventually recovered from various hiding places. Anthony Fats Pino, the mastermind, died in prison in 1973. O'Keefe, the informant who'd broken the case open, was released after serving his reduced sentence and disappeared into obscurity, living under a new identity. The others served long prison terms, with some dying behind bars. The Brink's robbery had lasting impacts on the security industry. Brink's implemented numerous changes to their procedures, including enhanced employee screening, improved alarm systems, and strict protocols about vault access. The robbery had exposed vulnerabilities that the company had been unaware of, and they worked diligently to address them. For law enforcement, the case demonstrated the importance of patient, thorough investigation. The FBI had pursued the case relentlessly for 6 years, refusing to give up even when leads ran cold. Their persistence paid off when O'Keefe decided to cooperate, but that opportunity only arose because investigators had maintained pressure on the gang members throughout the intervening years. The case also illustrated a common pattern in criminal conspiracies. They tend to fall apart over time. The Brink's gang had executed a nearly perfect robbery, but they couldn't maintain the discipline and unity necessary to truly get away with it. Personal conflicts, greed, and the simple inability of 11 men to keep a secret for years led to their eventual capture. The Brink's robbery remains a landmark case in American crime history. Number 17. The Felony Lane Gang Operations, 2000s to 2010s. Unlike most stories of daring bank robberies, the Felony Lane Gang didn't rely on guns, masks, or sophisticated planning to steal millions of dollars. Instead, they used a method so simple yet effective that it operated successfully for over a decade across multiple states. Identity theft combined with brazen impersonation at bank drive-through lanes. The gang's name itself described their method. They used the lane farthest from the bank building, the felony lane, where tellers had the poorest view of the driver. The operation began in South Florida in the early 2000s, though the exact origins are unclear. The method was straightforward. Gang members would break into parked cars, usually at parks, gyms, or beaches where people left purses and wallets in their vehicles. They'd steal identification, credit cards, and checks, then use this information to commit fraud at banks across the region. What made the Felony Lane Gang particularly effective was their use of female accomplices who resembled the victims. Once they had stolen identification, they'd find women within their network who looked somewhat like the victims in the stolen IDs. These women would then visit banks, using drive-through lanes to cash checks or make withdrawals from the victims' accounts. The drive-through lane was crucial to the scheme. Tellers viewing customers through video monitors or from a distance had difficulty determining if the person in the car truly matched the ID photo. The women would wear wigs, glasses, or hats to enhance the resemblance, and they'd present legitimate-looking identification stolen from the actual account holders. If the ID matched the account information, tellers often processed the transaction without suspicion. The gang operated on volume. They'd hit multiple banks in a single day, cashing checks and making withdrawals from different accounts. Individual transactions might be relatively small, a few hundred or a few $1,000s, but collectively the gang was stealing enormous sums. Law enforcement estimates suggest they stole over $100 million during their most active years. What made catching the Felony Lane Gang particularly challenging was their mobility. They operated across state lines, moving between Florida, Georgia, Tennessee, Texas, and other states. By the time local police identified a pattern in one area, the gang would have moved on to another region. The interstate nature of their crimes created coordination challenges for law enforcement agencies. The gang's structure was loose and network-based rather than hierarchical. Core members recruited others to participate in various roles: car burglars, check cashers, document forgers who created fake IDs to supplement stolen ones, and mules who transported stolen property between states. This distributed structure made it difficult for law enforcement to identify a single leader or organization to target. Banks began noticing patterns: multiple fraudulent transactions at drive-through lanes, victims reporting theft from cars before discovering bank fraud, and surveillance footage showing women who looked similar to but not quite identical to account holders. But individual banks lacked the big-picture view necessary to understand the full scope of the operation. The FBI eventually took the lead in investigating what they realized was a sophisticated interstate fraud ring. Agents began sharing information across field offices, connecting crimes committed in different states. They analyzed surveillance footage, tracked stolen vehicle patterns, and worked with local police departments to build a comprehensive picture of the gang's operations. One challenge was the sheer number of people involved. The FBI identified over 100 individuals who participated in Felony Lane Gang activities at various times. Some were career criminals, while others were opportunists recruited for specific jobs. The fluid membership made traditional investigation techniques difficult. There was no single organization to infiltrate or specific leadership to target. The breakthrough came through technology and pattern analysis. Investigators used facial recognition software to compare surveillance footage from different bank robberies, identifying repeat participants. They tracked stolen checks and credit cards, mapping the flow of stolen items from initial thefts through eventual fraudulent use. Financial analysis revealed networks of people who were benefiting from the crimes. As the investigation progressed, arrests began. In 2010 and 2011, coordinated operations in multiple states led to dozens of arrests. Some of those captured agreed to cooperate, providing information about the gang's methods and identifying other participants. This intelligence fueled additional arrests in subsequent years. The prosecutions revealed the full scope of the operation. Individual participants had been involved in hundreds or even thousands of fraudulent transactions. Some had earned hundreds of thousands of dollars from their criminal activities. The victims numbered in the tens of thousands, people whose cars had been broken into, IDs stolen, and accounts drained without their knowledge until they reviewed bank statements or were notified by their banks. Sentences varied widely depending on individuals' roles and cooperation. Major figures in the operation received sentences of 10 to 20 years in federal prison. Lower-level participants, especially those who cooperated, received shorter terms. The prosecutions continued for years as new participants were identified and arrested. The Felony Lane Gang case led to significant changes in banking security. Drive-through lanes were recognized as vulnerability points where identity verification was weakest. Many banks upgraded their camera systems, providing tellers with higher-resolution images of customers. Some implemented biometric verification or additional security questions for drive-through transactions. Employee training emphasized the importance of careful ID verification even during routine transactions. Law enforcement agencies also improved their coordination and information sharing. The FBI created specialized task forces focused on interstate fraud operations, recognizing that modern criminals often operate across jurisdictional boundaries. State and local police received training in recognizing patterns that might indicate organized fraud rings rather than isolated incidents. For the public, the Felony Lane Gang case served as a warning about vehicle security and identity theft. The simple act of leaving a purse or wallet in a parked car, even for a brief gym visit or park outing, could lead to significant financial losses and identity theft problems. Public awareness campaigns emphasized the importance of securing valuables and monitoring financial accounts for suspicious activity. What makes the Felony Lane Gang particularly interesting from a criminological perspective is how they exploited systemic vulnerabilities rather than using traditional robbery methods. They didn't need to threaten tellers or overcome physical security. They simply took advantage of weaknesses in identity verification procedures and the practical limitations of drive-through banking. The gang's longevity also demonstrates how criminal organizations can persist when they operate below the threshold that triggers intensive law enforcement response. Individual victims lost hundreds or thousands of dollars, serious crimes, but not the sort that receive extensive investigation resources. Number 18. The Banco Central Burglary in Brazil, 2005. U.S. currency impact. In August 2005, a gang in Fortaleza, Brazil, executed one of the largest bank burglaries in history, stealing approximately 164 million Brazilian reais, equivalent to about $70 million at the time. While this occurred in Brazil, the case has significant American connections because much of the stolen money was eventually converted to U.S. dollars, laundered through American financial systems, and used to purchase assets in the United States. The burglary itself was remarkably sophisticated. The gang rented a commercial property near the Banco Central branch and spent 3 months excavating a tunnel approximately 650 feet long, running from their property under streets and buildings to reach the bank's vault. They worked methodically, removing tons of dirt and reinforcing the tunnel to prevent collapse. The tunnel operation required significant organization and resources. The gang employed engineers to design the tunnel, construction workers to excavate it, and logistics personnel to remove dirt without attracting attention. They operated under the cover of a legitimate business, a landscaping company that provided explanation for trucks removing soil from the property. On the weekend of August 6 to 7, 2005, the gang entered the bank vault through their tunnel and began removing money. They worked through the weekend, loading cash into bags and transporting it back through the tunnel to their staging area. The amount stolen was enormous. They took approximately 3.5 tons of currency, mostly in 50 real notes. The burglary wasn't discovered until Monday morning when bank employees arrived for work and found the vault partially emptied. The scale of the theft was immediately apparent, and Brazilian federal police began investigating. The tunnel was discovered quickly, and investigators were amazed by its length, sophistication, and the engineering skill required to construct it. The American connection emerged as investigators tracked where the money went. Converting 164 million reais into more stable currency was a priority for the gang, and U.S. dollars were the obvious choice. They began moving money through exchange houses and black market currency dealers, converting reais to dollars at rates that reflected the illicit nature of the transactions. Some of the converted dollars were smuggled into the United States, where they were used to purchase real estate, luxury vehicles, and other assets. Property in Florida, Nevada, and Texas was acquired using funds that originated from the Banco Central burglary. These purchases were structured to avoid triggering currency reporting requirements, using shell companies and intermediary buyers to obscure the money source. American investigators became involved when suspicious transactions were reported by financial institutions. Large cash purchases, wire transfers from questionable sources, and other red flags triggered examinations that eventually connected back to the Brazilian burglary. The FBI began working with Brazilian federal police, sharing information and coordinating investigations. The investigation revealed a sophisticated international money laundering network. The gang hadn't simply stolen money, they'd prepared to integrate it into the legitimate economy through carefully planned laundering operations. They used multiple techniques: currency exchange, real estate purchases, business investments, and offshore accounts in various countries, including some with U.S. connections. Brazilian police made their first arrests within weeks of the burglary. Several gang members were caught with large amounts of cash, while others were identified through surveillance footage and informant tips. As arrests mounted, some participants began cooperating with authorities, providing information about the operation's structure and where money had been hidden. The investigation in the United States led to the freezing of assets believed to have been purchased with stolen funds. Properties in Florida were seized, bank accounts were frozen, and vehicles were confiscated. American prosecutors worked with Brazilian authorities to ensure that these assets could be eventually returned to Brazil as part of restitution. One challenge in the investigation was the sheer number of people involved. The tunnel operation alone had required dozens of workers, most of whom claimed ignorance about the criminal nature of the project. They'd been hired as construction workers and didn't necessarily know they were helping build a bank robbery tunnel. Proving criminal intent was difficult for many lower-level participants. The Brazilian legal proceedings resulted in numerous convictions. The mastermind and key participants received substantial prison sentences, some over 30 years. Lower-level participants received shorter terms or were released due to insufficient evidence of knowing participation. The trials revealed extensive details about the planning and execution of the burglary. Only a portion of the stolen money was ever recovered. Some was seized during arrests, more was found in hidden locations identified by cooperating witnesses, and assets purchased with stolen funds were confiscated. But a substantial amount, estimates suggest over half of the stolen money, was never recovered. It was presumably spent, remains hidden, or was successfully laundered and integrated into legitimate holdings. The American assets seized as part of the investigation were eventually sold, with proceeds returned to Brazil to partially compensate for the theft. The process took years and involved complex legal proceedings in multiple jurisdictions, but it demonstrated that international cooperation could successfully address crimes with cross-border dimensions. The Banco Central burglary led to significant changes in banking security in Brazil and internationally. Banks recognized that tunneling, while seemingly old-fashioned, remained a viable attack method. Security measures were enhanced to detect underground approaches, including seismic sensors and regular inspections of nearby properties for signs of excavation. The case also highlighted vulnerabilities in international currency exchange systems. The gang's ability to convert such large amounts of stolen currency demonstrated weaknesses in oversight of exchange houses and informal currency dealers. Both Brazilian and American regulators implemented stricter monitoring of large currency transactions, particularly those involving recent Brazilian real to dollar conversions. For American law enforcement and financial regulators, the case reinforced the importance of monitoring real estate purchases and other large asset acquisitions for signs of money laundering. The fact that stolen Brazilian reais had been successfully used to purchase property in the United States demonstrated that international criminals viewed American real estate as an attractive vehicle for laundering proceeds. The Banco Central burglary stands as one of the largest bank thefts in history and demonstrates the increasingly international nature of major crimes. A burglary in Brazil required American financial infrastructure to realize full value for the criminals. The investigation required cooperation between countries, sharing of intelligence, and coordination of legal actions across borders. The case also illustrates the limitations of even successful investigations. Despite intensive efforts by competent investigators in multiple countries, over half the stolen money was never recovered. Number 19. The Midland Bank Clearing Center Robbery, 1995. On a quiet Sunday in January 1995, the Midland Bank Clearing Center in the City of London processed its usual weekend operations with a skeleton crew. This facility wasn't a typical bank branch but rather a clearinghouse where massive amounts of cash moved between institutions. On this particular Sunday, approximately £50 million, roughly $75 million at the time, was stored in the facility's vault. What no one knew was that a sophisticated crew had been planning for months to steal it. The robbery was orchestrated by John Goddard, a former security guard who'd worked at various financial institutions in London and understood their vulnerabilities. He'd recruited a team that included former colleagues, professional criminals, and technical specialists who could defeat security systems. The planning phase had taken over a year, with the crew studying the clearing center's operations in meticulous detail. Their approach combined insider knowledge with technical sophistication. Goddard had worked security in the financial district and knew how these facilities operated, when they had the most cash, when staffing was lightest, and what security measures they employed. He'd identified Sunday afternoons as the optimal time: significant cash on hand, minimal staff, and reduced security presence during the weekend. The crew entered the building using credentials and access codes that Goddard had obtained through his security contacts. They'd created false identification that would pass casual inspection, and they'd timed their entry to coincide with a legitimate delivery, reducing scrutiny of their presence. Once inside, they moved quickly to take control. There were only 5 employees working that Sunday. The gang rounded them up efficiently, using zip ties to restrain them in a secure room. They were professional and calm, making clear that cooperation would ensure everyone's safety. The employees, trained to comply during robberies, offered no resistance. Within 10 minutes of entering, the gang had complete control of the facility. The vault was their target, and they'd prepared extensively for accessing it. The clearing center's vault had time delay locks and multiple security measures, but the gang had planned for this. They'd obtained information about the locking system and had tools specifically designed to bypass it. More importantly, they'd chosen their timing to coincide with a period when the vault would be accessible for legitimate business operations. Using a combination of technical bypasses and information extracted from the employees, who cooperated fully, understanding their lives were worth more than the bank's money, the gang opened the vault. What they found was exactly what they'd expected: pallets of cash stacked and bundled, ready for distribution to various banks the following business day. For the next 4 hours, they systematically loaded cash into duffel bags and containers they'd brought. The amount was staggering, more money than most people would see in multiple lifetimes. They worked methodically, taking breaks to ensure they didn't miss anything and to verify that the restrained employees remained secure and comfortable. By early evening, they'd loaded approximately £50 million into their vehicles. Vans disguised as delivery trucks that wouldn't attract attention in the financial district even if spotted on Sunday. They'd carefully planned their exit routes, knowing that once the robbery was discovered, police would establish roadblocks throughout the area. Before leaving, they provided the restrained employees with access to a phone set on a timer, ensuring they could call for help but not so quickly that it would interfere with the gang's escape. This detail, showing concern for the hostages while still protecting their getaway, demonstrated the professional nature of the operation. The employees freed themselves and called police about 2 hours after the gang departed. By that time, the robbers had successfully navigated out of central London and dispersed to various prearranged locations. The money was hidden in multiple sites, divided among crew members according to their agreed-upon shares. The investigation was massive. The Metropolitan Police organized one of their largest robbery investigations, bringing in detectives from across London. The FBI was consulted because some crew members had American connections, and there was concern that money might be laundered through U.S. financial institutions. The investigators faced immediate challenges. The gang had left minimal physical evidence. They'd worn gloves, used false identities, and planned their actions to avoid creating unnecessary traces. The employees could provide descriptions, but these matched common criminal profiles rather than pointing to specific individuals. The breakthrough came from financial intelligence rather than physical evidence. As crew members began spending or moving their shares of the money, patterns emerged. Large cash deposits, unusual asset purchases, and other financial activities drew attention from analysts tracking suspicious transactions. Several crew members made the classic mistake of spending beyond their means too quickly after the robbery. John Goddard, the mastermind, was identified through his security industry connections. Investigators looking into people with insider knowledge of clearing houses found Goddard had motive, means, and opportunity. Surveillance was established, and gradually, evidence accumulated connecting him to the robbery. When arrests began in late 1996, the gang's discipline started breaking down. Some members, facing serious charges, agreed to cooperate in exchange for reduced sentences. Their testimony revealed the full extent of the planning and execution, providing the detailed evidence needed for prosecution. Goddard was convicted and sentenced to 18 years in prison. Other crew members received sentences ranging from 5 to 15 years depending on their roles and cooperation. The courts ordered restitution, though recovering £50 million proved nearly impossible. Some money was seized during arrests, but the majority was never recovered. The Midland Bank Clearing Center robbery led to comprehensive changes in how financial clearing houses operate. Security measures were dramatically enhanced, including improved access control, additional guards during high-value cash storage periods, and better coordination with law enforcement. The industry recognized that these facilities, while not public-facing like retail banks, required security comparable to high-security bank branches. The case also highlighted how insider knowledge remains one of the most dangerous threats to financial security. Goddard's understanding of clearinghouse operations allowed him to plan a robbery that exploited specific vulnerabilities. This led to enhanced employee screening, stricter access control for former employees, and greater monitoring of personnel who might have knowledge valuable to criminals. For law enforcement, the case demonstrated the importance of financial intelligence in solving major robberies. Traditional detective work, interviewing witnesses, processing crime scenes, following physical leads, had limited success initially. What broke the case open was financial analysis tracking suspicious transactions and spending patterns. This reinforced the growing recognition that following money is often more effective than following traditional evidence trails. Number 20. The Fortaleza Armored Car Heist, 1992. In December 1992, an armored car traveling through Fortaleza, Brazil, was ambushed by a heavily armed gang in what became one of the most violent armored car robberies in South American history. While this occurred in Brazil, the case has American connections through the weapons used, which were traced back to U.S. sources, and through the money laundering networks that moved stolen funds through American financial institutions. The gang had been tracking the armored car's routes for weeks, noting its schedule and identifying a vulnerable point where it would be isolated from immediate police support. They chose a location on the outskirts of Fortaleza where the road passed through a relatively unpopulated area, a spot where they could block the vehicle without witnesses and with time to complete the robbery before police could respond. On the afternoon of the heist, the gang positioned multiple vehicles to block the armored car's path. When the vehicle approached, they executed a precision ambush, surrounding it from multiple directions and cutting off any escape route. The gang was heavily armed with military-style weapons, assault rifles, grenades and explosives, far outgunning the armored car's two guards. The confrontation was brief but intense. The guards, recognizing they were outmatched and outgunned, chose not to resist. The gang had made their overwhelming firepower clear, and the guards understood that attempting a defense would be suicidal. They surrendered, allowing the gang to take control of the vehicle without a prolonged firefight. The gang used explosives to breach the armored car's cargo compartment, a technique requiring both technical knowledge and considerable risk. Too much explosive would destroy the currency inside, too little wouldn't breach the armored plating. They'd practiced their technique and calculated the charges precisely, opening the compartment without damaging the cargo. Inside, they found approximately $15 million in Brazilian reais and US dollars. The armored car had been transporting cash for several banks and included foreign currency for international transactions. The gang loaded everything into their vehicles, working quickly but efficiently. The entire operation, from ambush to departure, took less than 20 minutes. The guards were left unharmed but bound, with the gang disappearing into the Brazilian countryside before police could respond. The robbery was discovered when the guards freed themselves and reported what had happened. Police arrived to find the armored car breached and empty, with evidence of the military-style operation scattered across the scene. The investigation revealed connections to American sources through the weapons used. The assault rifles were traced to U.S. manufacturers and had been smuggled into Brazil through international arms trafficking networks. This brought the ATF, Bureau of Alcohol, Tobacco, Firearms and Explosives, into the investigation, working with Brazilian authorities to track the weapons' provenance. The money laundering aspect also involved American institutions. The stolen U.S. dollars needed to be laundered before they could be safely used, and some of this money flowed through exchange houses and banks with American connections. The gang used sophisticated techniques to move money across borders, including wire transfers through shell companies and currency smuggling through various channels. The FBI became involved when suspicious transactions were reported by American banks. Large deposits of cash, wire transfers from questionable sources, and other red flags triggered investigations that eventually connected back to the Fortaleza robbery. Federal agents began coordinating with Brazilian police, sharing intelligence about financial flows and potential suspects. The case broke open when one of the gang members was arrested in Miami on unrelated charges. During processing, his fingerprints triggered alerts connecting him to the Fortaleza robbery investigation. Under interrogation and facing serious charges in both the US and Brazil, he agreed to cooperate, providing detailed information about the gang's operations and the locations of other members. This intelligence led to a series of coordinated arrests in Brazil and the United States. Several gang members were captured in Brazil, while others who'd fled to the US were arrested by federal agents. The cooperation between countries was essential. Neither could have solved the case alone, but together they dismantled the entire operation. The prosecutions occurred in multiple jurisdictions. Gang members arrested in the U.S. faced charges including money laundering, illegal weapons possession, and conspiracy. Those arrested in Brazil faced charges for the robbery itself, illegal weapons possession, and various other offenses. Several defendants were extradited between countries to face charges in the jurisdiction where they'd committed specific crimes. Sentences varied widely. The gang's leader received over 30 years in Brazilian prison, while other members received terms ranging from 10 to 25 years depending on their roles. Those prosecuted in the United States generally received shorter sentences focused on the financial crimes rather than the violent robbery itself. Only a portion of the stolen money was ever recovered. Some was seized during arrests, and financial institutions froze accounts suspected of containing stolen funds. But millions of dollars remain missing, presumably spent or hidden in locations investigators couldn't discover. The complexity of the money laundering network meant that tracing all the funds was impossible. The Fortaleza armored car heist highlighted the international dimensions of modern organized crime. The gang used American weapons, targeted currency including US dollars, and laundered money through American financial institutions. A crime in Brazil required American law enforcement participation to fully investigate and prosecute. The case also demonstrated the challenges armored car companies face in protecting their vehicles from military-style attacks. Standard armored cars are designed to resist typical criminal threats, but they're vulnerable to determined gangs with military-grade weapons and explosives. The incident led to enhanced security measures, including route randomization, additional guards, and better communication systems to call for help during emergencies. For American law enforcement, the case reinforced the importance of international cooperation and information sharing. Crimes don't respect borders, and effective investigation requires agencies to work together across jurisdictions. The success in solving the Fortaleza case demonstrated that such cooperation, while sometimes challenging, produces results. The weapons trafficking aspect also highlighted ongoing challenges in controlling illegal arms flows. Weapons manufactured in the United States continue to be smuggled to other countries despite export controls and law enforcement efforts. The Fortaleza case was one of many where U.S. weapons appeared in foreign crimes, prompting continued attention to arms trafficking networks. Number 21. The Brazilian Central Bank Internet Heist, 2005. In the summer of 2005, criminals executed one of the first major cyber heists targeting banking systems, stealing approximately $70 million from the Brazilian central bank through sophisticated manipulation of the bank's computer systems. While this occurred in Brazil, the case has profound American connections because much of the technical expertise, software vulnerabilities exploited, and subsequent money laundering involved American technology companies, cybersecurity firms, and financial institutions. The heist began months earlier when cybercriminals gained access to the central bank's computer network through a combination of social engineering and technical exploits. They sent phishing emails to bank employees, disguised as legitimate communications from technology vendors and partners. Some employees, believing the emails were genuine, provided login credentials or clicked links that installed malware on bank computers. Once inside the network, the criminals worked patiently to expand their access. They moved laterally through systems, escalating their privileges and gaining deeper access to critical financial infrastructure. They studied the bank's operations, learning how transfers were authorized and executed. Their goal was to understand the system well enough to manipulate it without triggering alarms or security measures. The American connection was significant because the bank systems ran on software from American technology companies. The criminals had identified vulnerabilities in this software, some known but unpatched, others zero-day exploits that even the manufacturers weren't aware of. They exploited these vulnerabilities to gain administrative access to systems that controlled wire transfers and account management. Over several weeks, the criminals made small test transfers, verifying that they could move money without detection. These tests helped them understand which types of transactions triggered scrutiny and which moved through automated systems with minimal oversight. They refined their techniques, learning how to make transfers appear legitimate to both automated systems and human reviewers. In August 2005 they executed their main attack. Over a weekend when staffing was reduced, they initiated hundreds of wire transfers moving money from central bank accounts to accounts they controlled around the world. The transfers were structured to appear routine, amounts that weren't unusual for the central bank's normal operations, destinations that had received legitimate transfers before, and timing that matched typical weekend processing. The accounts receiving the transfers were in dozens of countries, including several in the United States. American banks processed incoming wires totaling millions of dollars, unaware that the funds were stolen. The criminals had created shell companies with legitimate appearing paperwork, opening accounts that seemed connected to actual businesses. This preparation allowed the stolen money to enter banking systems without triggering immediate alerts. By Monday morning, when central bank employees returned to work and began routine verification procedures, the theft was discovered. Internal audits revealed that approximately $70 million was missing, transferred to accounts worldwide over the weekend. The scale and sophistication of the theft was immediately apparent. This was not a simple hack but a carefully planned operation that had required extensive preparation and deep understanding of the bank systems. The investigation involved multiple countries and required unprecedented cooperation between law enforcement agencies, cybersecurity firms, and banking institutions. The FBI's cyber division became involved because American technology and financial institutions had been used in the crime. Agents worked with Brazilian authorities to trace the digital footprints left by the criminals and track where the stolen money had gone. American cybersecurity companies were brought in to analyze the malware and techniques used in the heist. They discovered sophisticated custom software designed specifically to manipulate the central bank systems. The code showed professional development skills and deep knowledge of both cybersecurity and banking operations. This wasn't the work of amateur hackers but of organized criminals with significant technical resources. Tracing the money proved challenging because it had been split among so many accounts in different countries, each with different banking regulations and cooperation levels. American investigators worked to freeze accounts in U.S. banks that had received stolen funds, but the criminals had anticipated this and had already begun moving money to other accounts or converting it to assets. Some of the stolen funds were used to purchase real estate in the United States, particularly in Florida and Nevada where large cash purchases raised fewer questions. Luxury vehicles were bought through American dealerships. Cryptocurrency exchanges processed transactions converting stolen money into digital assets that were harder to trace. The criminals used the full toolkit of modern money laundering, exploiting weaknesses across the financial system. The breakthrough in the investigation came from technical analysis rather than traditional detective work. Cybersecurity experts analyzing the malware found coding signatures and techniques that matched known criminal groups. By studying the software's construction and behavior, they could identify likely authors based on their distinctive programming styles and preferred tools. This intelligence, combined with financial tracking of the stolen money, allowed investigators to identify several suspects. Arrests began in 2006, with operations in Brazil, the United States, and several other countries apprehending individuals connected to the heist. Some were the technical specialists who developed the malware and executed the hack, while others were money launderers who'd helped move and hide the stolen funds. The American arrests focused primarily on individuals involved in the money laundering network rather than the hack itself. These included operators of shell companies that had received stolen funds, currency exchange specialists who'd converted the money, and financial advisors who'd helped criminals hide their proceeds. The prosecutions revealed a sophisticated network spanning multiple countries and involving dozens of participants. Sentences varied widely depending on roles and cooperation. Technical specialists who'd executed the hack received sentences of 10 to 20 years when captured and prosecuted. Money launderers generally received shorter terms, 5 to 10 years, particularly if they cooperated with investigators. Some lower-level participants received probation or short prison terms in exchange for testimony against more significant figures. Only a fraction of the stolen $70 million was ever recovered. Some was seized from frozen bank accounts, and assets purchased with stolen funds were confiscated and sold. But the majority remains missing, likely spent, converted to untraceable assets, or hidden in accounts that investigators couldn't identify or access. The Brazilian central bank cyber heist had lasting impacts on how financial institutions approach cybersecurity. It demonstrated that even central banks with substantial security resources could be penetrated by determined, sophisticated criminals. Number 22. The Antwerp Diamond Center Heist, 2003. On the weekend of February 15 to 16, 2003, thieves broke into the Antwerp diamond center in Belgium and stole an estimated $100 million worth of diamonds, gold, jewelry, and cash from the vault. While this occurred in Europe, the case has significant American connections through the diamond trade, as much of the stolen property eventually entered international markets where American dealers and collectors were among the purchasers. The Antwerp Diamond Center was considered one of the most secure facilities in the world, housing a vault that contained safety deposit boxes used by diamond merchants from around the globe. The building had multiple layers of security: guards, cameras, motion detectors, thermal sensors, and a sophisticated alarm system. The vault door itself weighed several tons and was protected by a combination lock with millions of possible combinations. The mastermind of the heist was Leonardo Notarbartolo, an Italian career criminal who'd spent years preparing for the robbery. He posed as a diamond merchant, renting an office in the diamond center and building relationships with other tenants. This cover gave him legitimate access to the building and allowed him to study its security systems over an extended period. Notarbartolo recruited a crew of specialists, each with expertise in different aspects of the robbery. Together they spent over 2 years planning every detail. They studied the building's security systems, identifying vulnerabilities and developing methods to overcome each layer of protection. They practiced their planned actions repeatedly, timing every step to ensure the operation would proceed smoothly. Their approach was methodical. They defeated the cameras by temporarily blocking them in ways that didn't trigger alarms. They bypassed motion detectors using hairspray applied to sensors, creating a coating that prevented them from detecting movement. They defeated thermal sensors using reflective shields that blocked their body heat signatures from being detected. The vault door presented the greatest challenge. Rather than trying to crack the combination through traditional safe-cracking methods, they used insider knowledge about the lock's construction. They'd obtained technical information that allowed them to manipulate the locking mechanism, opening the vault without triggering alarms designed to activate during forced entry attempts. Over that weekend in February 2003, the gang entered the vault and systematically opened safety deposit boxes. They worked for hours, breaking into over 100 boxes and removing their contents. The haul was extraordinary: diamonds of exceptional quality, gold jewelry, cash in various currencies, and other valuables that diamond merchants had stored for safekeeping. When the robbery was discovered Monday morning, the Diamond Center and Belgian police were shocked. The sophisticated security system had been thoroughly defeated, and the thieves had worked with such expertise that they'd left minimal evidence. The investigation began immediately, but initially, authorities had few leads about who could have executed such a technically sophisticated heist. The American connection emerged as stolen diamonds began appearing in international markets. The diamond trade is global, with stones moving through dealers in multiple countries before reaching end consumers. Some of the stolen Antwerp diamonds were offered to American dealers, who purchased them without knowing their criminal origin. The FBI became involved when American dealers reported suspicious stones being offered for sale. Some diamonds were too high quality and too large to have come from normal wholesale channels at the prices being asked. When descriptions matched stones reported stolen from Antwerp, American and Belgian authorities began coordinating their investigations. The gang's downfall came from an unexpected mistake. As they were leaving the area after the robbery, they stopped at a highway rest area to divide some of the spoils and dispose of evidence they didn't want to carry with them. In their haste or perhaps overconfidence, they left behind a bag containing critical items: security system components they'd removed, receipts from purchases related to the heist, and other materials that investigators could trace directly back to them. A maintenance worker at the rest area found the abandoned evidence and turned it over to local police, who immediately recognized its potential connection to the Diamond Center robbery that was dominating news coverage. The receipts and documentation led investigators directly to Notarbartolo, whose rental office in the Diamond Center suddenly transformed from innocent cover to damning evidence. Belgian police reviewed all security footage from Notarbartolo's time in the building with new scrutiny. His movements, which had seemed like normal business activity when he was believed to be a legitimate diamond merchant, now revealed patterns of reconnaissance and preparation. They could see him studying security measures, timing guard rotations, and positioning himself to observe vault operations. Notarbartolo was arrested along with several of his accomplices. The evidence against them was substantial: the physical items they'd carelessly abandoned, security footage showing their activities, witness testimony about suspicious behavior, and forensic evidence linking them to the crime scene. Under interrogation, the full extent of their years-long preparation became clear, revealing the sophistication of their planning. The trials resulted in convictions and substantial prison sentences. Notar Bartolo received 10 years in Belgian prison, as did several of his key accomplices. The court proceedings revealed fascinating details about how they defeated each security layer, turning the case into a study in both criminal ingenuity and the importance of proper evidence disposal. However, most of the stolen property was never recovered. The diamonds, being small, portable and difficult to trace once removed from their settings and documentation, had likely been sold through various channels in multiple countries. Many now belonged to purchasers who had no knowledge of their criminal origin and no way of knowing they were handling stolen property. American dealers who'd unknowingly purchased stolen diamonds faced complicated legal and financial situations. Some stones could be identified definitively as stolen property through unique characteristics that had been documented by their original owners, specific inclusions, unusual cuts, or certification numbers. These had to be returned to their rightful owners, leaving the dealers who'd purchased them in good faith to absorb substantial financial losses. Other stones couldn't be definitively identified, creating murky situations where suspicions existed but proof was lacking. Current owners were generally allowed to retain these diamonds, though the cloud of uncertainty about their provenance affected their value and marketability. The legitimate diamond trade relies heavily on trust and provenance, and stones with questionable histories become difficult to resell. The case highlighted fundamental vulnerabilities in the international diamond trade that affected American markets significantly. Unlike many valuables, diamonds lack serial numbers or standardized identification systems in most cases. Thanks for watching. If you liked this video, hit that like button, subscribe and share it with someone who'd enjoy it too. More content is on the way.